All right. Good morning, everybody. We are pretty early today, but we have the jobs data coming out in the next 2 minutes, and so that's why we are early today. We are going to be seeing what the November non-farm payrolls look like, the unemployment rate, the average hourly earnings month over month, the labor participation rate, the retail sales numbers. I mean, there's a lot of stuff that we are getting in the next literal 2 minutes. Yeah, it's early, right? This feels like when you show up to school early and the teacher's there early. And as a student, you're just like, wait, why is the teacher here early? Well, we're here early because we got a lot of jobs data. A lot of jobs data. I honestly forgot. I woke up this morning and I forgot we had all the jobs data. And I was like, wait a second, we do have all this jobs data. We need to be early for this. So we're here, we're live. So in the next 1 minute, we're gonna get all these answers. As you can see, we have a lot of numbers that are loading up right here. And yeah, I mean, I don't know. How big of an impact is it gonna have today? Street wants about 40,000 jobs. 50,000 is the forecast. Markets were ugly last night in the futures, and they kind of not fully recovered, but they started to make a little bit more recovery this morning. So I guess we'll see when we get all these numbers if the markets are happy with them or not. But this is what we are going to have to deal with today, and it will determine, honestly, probably the trajectory of the rest of the month, like into December, end of December. But it also might be a nothing burger. I don't think it's going to be a nothing burger, but I don't know. Maybe it's interpreted as a nothing burger if the numbers are just not that serious. So again, if we get a really big number, bullish because the labor market's good. We get a really bad number, bullish because rate cuts, but rate cut already happened. So maybe not the most bullish because the street might just be upset about it. So let's see. All right. Wow. Unemployment, 4.6, up from 4.4. That's ahead of expectations. Retail sales, 0.8 versus 0.4. That is also ahead of expectations. 62.5 on the labor participation rate. That's ahead of expectations versus 62.4. That means more people are joining the labor force, which is good. The non-farm payroll number, that's the big one that we are looking for. 64,000. Wow. 64,000 is what we got for the month of November. Street wanted 50. We came in at 64. That's actually not too bad because we already got the rate cut. So we don't need some horrendous number for it to be better. October comes in at negative 105. October comes in at negative 105. Although that doesn't have a K next to it. So is it negative 105 jobs or negative 105,000? We knew October was going to be bad. There was plenty of data to show us that. That's weird. I'm not sure if that's negative 105 or negative 105,000. But November comes in at 64,000. Let's look at the charts and see what we got going on. That's not too bad. 64,000 means that labor market is bad, but it's way better than, or not way better, but it's definitely better than the expectations. S&P's up, Hoodie's up, PayPal's up, SoFi's up, Bitcoin's up, Bitcoin 87.5, BitMine is up, Palantir's flat, Broadcom's up a little bit. Broadcom had a pretty ugly day yesterday. Ford is up after some of the news they announced yesterday. VG is up, Tesla's down. Tesla had a really good day yesterday though. Tesla right there, 473. And then CoreWeave is up, Iren is up, Affirm is up. I mean, you're not really getting movement in the markets. I think it's going to take a second for them to dissect these numbers. 64,000 versus 50,000. Unemployment rate is up 4.4 to 4.6. That's actually a bigger number. 4.4 to 4.6 to me is like, okay, unemployment is absolutely increasing. Government payrolls came in at negative 5,000 for November. Manufacturing payrolls were negative 5,000 for November. Non-farm payrolls private in November were 69,000 positive. And then retail sales year over year, 3.5%. Street expected 4.2%. So that is a bit lower than expected. Let's get a lot more coverage on this stuff. And then we'll keep going from there.
Waiting for did indeed move up to 4.6%. 4.6% would be the hottest going back to July of 21 when it was 4.7%. If we look at the underemployment rate known as U6, it's at 8.7%. 8.7% would be actually the warmest going all the way back to July of 21 as well. And finally, labor force participation expanded a tenth. 62.4 was expectations, comes in at 62.5. 62.5 would be the best read since April when it was 62.6, which is where we started the year and indeed is the two highest reads of the year. Now let's go to retail sales, shall we? These are November numbers. Unchanged. Unchanged. We're looking for up 1/10. Unchanged comes in at, well, it equals where we were. To find a lower number, you have to go back to May when it was a negative number, -0.8%. Now, what happens when you strip out autos? It improves. So autos were a bit of a drag. Jumps up 0.4%, which would be the best since August when we were up 0.6. If you strip out autos and gas, it improves another 10, up 0.5%. And finally, the control group number or retail sales core is a very powerful up 0.8, up 0.8. Up 0.8 will be the best since it was up 0.9 in June of this year. And that was the high watermark. What has happened as we have done these numbers? We see interest rates moving to the downside, We came in at 4.16, down 1 in a 10-year, and we're now hovering right around 4.14, down a couple of basis points. A 2-year is down 5 basis points. So you see another steepening of the yield curve. It was at 3.50. So right now at 3.46, it'll be down about 4 basis points. And the pre-opening equities, well, the Dow is in the green, up 57 points. You know, I guess if you have to summarize these numbers, and I do apologize, all I see coming across the wires are November. I do not see October on the jobs front. Back to the panel.
We looked at October again. The confusing thing about October says negative 105K. Okay, that's what I was looking for. It said negative 105. They missed the K. So we lost 105,000 jobs in October. October was an ugly month, and I think all the data that we saw outside of the government data, given the government was shut down, kind of justified that. But November comes in at 64,000. So 64 is a slight beat against 50,000, which is good because it means the economy is not absolutely in some catastrophic situation when it comes to the labor market. It's bad, but it's not catastrophic, right? If that was like negative 64,000, that would not be the best. But it also justifies that we needed the rate cut. I mean, unemployment, as he said, the highest level since July of 2021. I mean, unemployment, if this trend continues, will be above 5% probably towards the end of 2026, which is something that we can't necessarily hide from as an economy. And you're going to have to try to save yourself from that with the rate cut thesis. Let's check if rate cuts have actually gone up for January. Nope, still the same, 24%. So this was not I guess, bad enough report to justify a January cut yet. Still 24%. Yields are coming down slightly. There's your 10-year at 4.17. Still needs to get back into the low fours. We were at 3.9 a couple weeks ago. We're not there yet. But this is what we're looking at. So CPI, I think, is Thursday, which is going to be really important because if the CPI is ultimately increasing, aka inflation is going up and the labor market's decreasing in terms of the number of jobs, then obviously that gets you into a stagflationary scenario, which I would imagine we could potentially escape. But that's what we're looking at. S&P flat now. It was up a little bit. Now it's flat. Robinhood was up a little bit. Now it's flat. SoFi continues to get hit. PayPal starting a bank. That news came out yesterday. And I guess that's why SoFi is down, because they have more competitors. BM&R somehow is up a little. Now it was up more than 3%. Now it's up 1.7. ETH is still below 3,000. Look at that candle, dude. It got to 29.75, then right back down to 29.33. Same with Bitcoin. We got to 87.6, now right down to 86.9. This might be a sell the news. This might be a sell the news. Any level of little momentum the market tried to hold on to as soon as the result. Even Broadcom, it was green. Now it just went red, 338. Now it just went red. The Hood event is tonight at 9 p.m. Eastern. I'll be live for it. 9 p.m. Eastern is the Hood event. Tesla's still going red. CoreWeave going red. Nebius still going red. Iran going red. Affirm's up a little bit. Rocket Lab down another 1%. ASTS down 1.8. Where's NVIDIA? We have a bunch of NVIDIA headlines this morning. NVIDIA 170s. NVIDIA is holding us. NVIDIA somehow throughout yesterday and today has kept up with the green. But obviously, we're still seeing a little bit of pain right here. All right, so that's your jobs report, folks. That's your jobs report. Came early just to see it, and we're here. 64,000 versus 50,000 expected. November unemployment rate 4.6 versus 4.4. We absolutely could rebound when the market opens. Yesterday night, though, dude, yesterday night was just ugly. Like, yesterday night was so ugly. And it wasn't like an absolute like bloodbath or anything. It was just the continuation of the pain that we had not only on Friday, but yesterday. And futures tanked, individual stocks tanked, and you got a low recovery in the pre-markets. But I don't know. Going into the last couple of weeks of December, we're going to see if the market actually wants to hold on to this excitement that they had towards the end of Thanksgiving, or if this thing goes the opposite direction. But this is what we had for non-farm payrolls. Let's get a little more coverage, and then we'll get into all the other headlines that we had this morning.
It's a little bit weaker than expected. However, when I take the first part of what I talked about, which is the federal government side, I'm wondering how much of that little uptick in there may have come from the federal government side of people who want a job but did not find one after being fully and officially laid off in the month of October and into November. So it's a little bit weaker. I tried to ask Powell at the last conference, Mr. Chairman, are you essentially prepared for weakness? And he said, well positioned. So I don't know if this number is within the tolerance of, hey, we're good. We cut already a couple times, 3 times. We're well positioned now for that weakness that he expected. Remember, the chair sat there at the podium and said, it could be minus, another 60,000 after we get done with revision. So these numbers are okay in the private sector. We have to wait to see how the private sector absorbs the excess labor that has been laid off from the federal level. I'm not saying that labor was excess. They were just laid off, and now they're excess.
Right. A lot more still to go through. Mike Santoli is standing by. Mike, as Rick had mentioned, we are seeing a pullback in yields pretty much across the curve. We also see a slight bit higher. Actually, we're kind of flat on the futures front.
Yeah, with the reflex, Melissa, was just a little bit of a firming up of the equity index futures. It feels like the first impression is it's one of the more palatable ways you can get the unemployment rate going to 4.6%, which is you still have net private sector job creation. It probably has dovish implications, at least on the margins, for the Fed. And I think the market has been locked into this rotation into economically sensitive parts of this market. It was even evident yesterday, even as we kind of have pressure on the AI CapEx trade that drives the indexes. So there's nothing in these numbers that I think is going to move the market really strongly off that spot, especially because there's such a strong confidence that we're going to get some kind of a economic reacceleration into the first part of next year.
Which is fair. We talked about that yesterday, this idea of the Trump administration essentially running the economy hot, which would be essentially more investment, more GDP growth, and potentially even more inflation, which would not be the worst thing in the world if you're assuming asset prices can benefit from that. So the question then becomes, does this labor market data have any meaningful impact? And quite frankly, I mean, the reason this jobs report was hyped up was because it was the first jobs report in a couple months, because we had the government shutdown, so we didn't have a lot of that data. But number two, it was, hey, is this going to be extreme? Is this going to be ugly jobs data, which is going to justify a volatile swing back and forth? And not really. 64,000 versus 50. Honestly, it's a rounding error. It's not 15, 14,000 jobs is not that crazy. And then the unemployment rate going higher, I think this was just well expected. I mean, I know the market thought it would be 4.4, 4.6 is not that crazy given October labor numbers were not that good. So it really should be zero impact on the market. I mean, theoretically, obviously there can be some impact on it, but that's why you're not seeing the pre-markets necessarily react in a negative or a positive way. That's what we got. Yeah, rate code probability slightly inching higher now. They're at 26%. They were at 24%. So you're getting a little bit more juice there. That meeting is January 28th. So we're going to need a lot more data going into January 28th. Now, CPI becomes the next piece of important data because CPI will determine if we are a bit more stagflationary or not. But this is what we got in the context of the jobs data. So for everyone asking for the TLDR, like what does this mean? I mean, honestly, it means nothing right now. You just didn't get an extreme number that would potentially swing the market one way or the other. Now, maybe the market's still to swing, but based on the pre-market action, nothing. Getting a little bit of red from some of the highs that we had, but that could also just be general pre-market behavior. Nothing specific on this number seems to be impacting the market in and of itself. And that's what we got with the jobs data. All right, so let's get into the other headlines we've got to get into. Thank you, everybody, for being here. Dude, I like being live early. It's kind of fun. Don't have any stress of being on time. Don't have to get harassed in the chat for not being on time. It's actually amazing. I think I'm going to try this more often. Just show up 20 minutes early. Everyone's like, wow, he's early. It's like, yup. Your boy's up and working. Your boy is up and working. Stop being early. Yeah, you guys can't make fun of me now for this. What is everyone eating for breakfast or drink? I actually have some coffee here. This is the coffee that we make downstairs. Can I show it? If I show it, I'm gonna end up spilling it, but just a bunch of cream and sugar to help me even drink this thing. And I never end up drinking it. I get a full cup and then like pretty much this much down is left because it's just something in the morning to like kind of get me going. But yeah, this ends up getting thrown out every single day. So that's what I got. Mountain Dew and cigarettes. That is, I cannot leave this planet without doing that one day. That's got to be my breakfast. Mountain Dew and cigarettes. That's got to be a hell of a breakfast. Grapefruit and avocado toast. Everything bagel with coffee. Red Bull, of course. Some pre-workout. All right, everyone's having breakfast. Except for the people across the pond. You guys are probably getting ready for dinner. All right, let's get into it. Thank you, everybody, for being here. So let's get into the headlines. First of all, let's look at this one real quick. This one just came in. This, again, to me is similar to the SpaceX headline. Databricks is ready to raise $4 billion at $134 billion valuation, and they've crossed $4.8 billion in annual revenue run rate from October. Databricks is likely going public soon. Same thing with SpaceX. When we start to see these companies go public, it means that the market is hot. Doesn't mean the market's topping, but it means the market is hot and there's actual liquidity for these companies to go public. I will not be buying the Databricks IPO. Same thing with SpaceX. I just think, forget the valuation. The only reason they're going public is for exit liquidity. At the end of the day, it's not really to raise money. It's really to, well, number one, it's to make sure that investors get compensated for the money that they've put in for years. But number two, it's to make sure that they have the ability to even go public in the first place. So I think when this goes public, you're probably going to see SpaceX go public as well. Maybe you'll see Anthropic come into the public markets in 2026. But it does signal that we are running into a rather hot economy for two companies like that to go public. Now, granted, there's just so much more investor demand for a lot of these companies that, you know, they're probably going to be able to get away with a very successful IPO. I just rather wait 6 months before I look at these stocks versus buy them immediately when they go public. But Databricks, yeah, it's a great company. Not saying it's not a bad company. Phenomenal company. They're growing incredibly fast. It's just, you know, if they're ready to go public, finally, after years and years and years, same thing like SpaceX, it means that they know there's excess liquidity that's out there. And yeah, historically, those IPOs don't tend to do well. Like they pump and then they don't pump. Well, then they dump because at the end of the day, like there's a lot of liquidity chasing those names. But in a low rate environment, you never know. You could obviously, you know, see it kind of hold up into that momentum. Same thing with SpaceX. Again, and you know, I was reading a couple of opinion pieces last night on SpaceX. I don't think I'm alone on this idea that the space data center stuff is one of the only reasons for why people are excited about SpaceX. Outside of Elon and Starlink and all this stuff, a lot of people are just like, hey, what's the story? There was an article that was quoting an anonymous Wall Street banker that said, basically, we have to sell a new story to get SpaceX to go public, and that's data centers in space. So, I mean, you're going to start to see a lot of these narratives form to justify these companies being public, which is fair. But nonetheless, maybe just waiting them out is not the craziest thing versus buying them on day one. So that's what we got with Databricks. That's what we got SpaceX. Yeah, the ticker symbol, there's a 7% chance on Polymarket the ticker symbol will be SEX, S-E-X. I mean, knowing Elon, maybe there is a chance. Maybe there is a chance. I mean, I think Elon would love something like that, but maybe the bankers would not be able to get that done. So we're going to see if that happens, but that could be one of the the tickers. You guys asked about Medline. So Medline is a medical supplier. They are also guiding for their IPO to the upper half of their price range. And this is going to be going into 2026 for Medline. I have not done enough research on Medline. I know that a lot of people are excited for them as a medical supplies company. They had to deal with a lot of the tariff stuff earlier this year. 5.37 billion is the valuation on IPO. I have just not looked into them. Like, I know way more about Databricks and SpaceX than I know about Medline. So this is one where I'll have to read the S1. The S1 actually came out December 8th. I'll put it in the chat if anyone wants to take a read to it. But yeah, this is something I would have to go through to understand. But again, a lot of the IPOs, dude, I haven't bought a single IPO this year, and I'm really not that into. The only IPO I care about is Canva, because I think they actually have a reasonable valuation for the growth that they put up. Every other IPO, I feel like at some level is going to be pretty aggressive. I mean, pretty much every IPO this year pumped and dumped. CoreWeave being the most specific one. Now, CoreWeave is still up from the IPO price, but boy, did it pump. So it's like with the IPOs, I think you just got to be a little careful, because there's going to be a lot of money that's just like, oh, I finally get to get access to Databricks. I finally get to buy SpaceX. You feel special. And in reality, the person that's dumping it on you has owned it 57x before you owned it. In fact, the big piece of news on SpaceX that I found out last night was Peter Thiel apparently is going to make $42 billion when this thing goes public, personally, not just for his fund, but personally, which is pretty damn incredible. What's his net worth? Peter Thiel net worth is 25 billion. Okay, so yeah, he's going to get closer to that $100 billion range if this one goes public. And if he doesn't sell and SpaceX doubles or triples, which feels like very likely over the next 10 years, he's going to be worth a lot more. I did not buy Figma. I tried, and Robina didn't let me. Well, they gave me one share. But yeah, in terms of like buying it after it goes public, even if you don't get an allocation, like, dude, Figma tripled on the same day. I'm not buying it at 130, right? So like, that's where I mean, like, Figma is a perfect example of just creating a bunch of bag holders because people were excited for it, but ultimately did not have the staying power to hold up to that valuation. Okay, so that's what we got on the IPO news with SpaceX and Databricks. The Databricks one is big. A lot of people have been waiting for Databricks, so we'll see when we get clarity on that. I think they're going to go public at the same time as SpaceX. I mean, they're not likely going to try to delay it because that's when they know the market's going to be hot. And so once we get that data, we'll get some more indications on what happens there. Basent and China, let's talk about that. So Basent says, so far, China's done everything we negotiated. We would like to see China rebalancing on trade. China needs to increase domestic consumption. Not possible for China to continue a $1 trillion surplus. And US-China could rebalance together. So you had some pretty thoughtful comments from Basent this morning on China. It goes to show that the China trade deal is working, or hopefully working in a meaningful way. And, you know, maybe that's going to create a lot more tailwinds for 2026 than headwinds. He also said that the U.S. will see tax refunds of up to $150 billion in Q1. So the U.S. could issue $100 billion to $150 billion in tax refunds in the first quarter of 2026. He noted that individual households may receive refunds of up to $1,000 to $2,000, which might be his way of making that whole tariff stimulus argument that Trump was talking about with $2,000 stimmy checks. It might just be through a form of a tax refund instead of a direct payout. Basent added that economic momentum should build in the first and second quarters of 2026, while inflation is expected to decline substantially in the first half of the year. I hope they're right about that inflation is expected to decline substantially, because if they are and growth goes up, you're going to see, you know, just a lot of momentum in the context of the broader economy. But this is another reason we can't ignore 2026 being good for the first half of the year. You're getting these tax refunds. I mean, you're talking about almost $200 billion getting injected back into the system. If individual people get $1,000 to $2,000 back, guess what? They're going to spend that money. Even if they're going to spend that money on paying down some of their debt, that's good for the economy. And if they actually, you know, put it into the economy, that's also really good. So this whole idea of running the economy hot, which Mike Wilson and Tom Lee have been talking about, it seems like there's enough tailwinds and enough different variables to make that happen, which again goes back to the point of, do you want to fight the Fed? Because that's essentially fighting the Fed and fighting the administration at the same time if you don't believe that that's going to happen, which might not be the best issue. Now, maybe that means that the level of money that enters the economy could somewhat be inflationary if you have that much momentum, which again, Mike Wilson says is not that bad of a thing, as long as it's contained. And the natural hedge against that is the labor market's declining. So you're going to have people that have less disposable income to spend. You should be able to keep it relatively in line. which, again, is not the worst in the world. So I think the takeaway from that is, do you get out of the market? No. Do you trim some of your positions? Sure. If you want to trim to sell and take some profits, that's totally fine. But getting net out of the market, I feel like, is a mistake if the Fed and the Trump administration continue to do what they say they're going to do, which is quantitatively ease and further control more investment into the United States. Now, this is Tom Lee's prediction for the end of the year. Remember that podcast he did on Friday that we watched, and he said we could have a big drawdown and then a big upswing. So basically, he's saying from January until July, we're going to go higher. It's going to chop from January to April, and then we're going to go higher from April to July. Then we're going to get the Fed nomination in that time as well, and the Supreme Court potentially overturning the Trump tariff. So we're going to go even higher. And then we're going to have this 20% decline in October, and then we're going to rally towards the end of the year going into December. That is his thesis on how this ends up playing out. Now, will it happen like this? I have no idea. But this is kind of the way he laid out what could happen. And I mean, maybe. Now, it is so specific of a argument that it feels a little unbelievable, the idea that it would exactly happen like that. And obviously, he doesn't know exactly what's going to happen. But I don't know, bro. Because if we fall that bad in October, November, the idea that we rebound that quickly in less than a month or a month and a half, I don't know. It seems unlikely. I feel like if we were to decline, it would happen earlier. And, maybe everyone's expecting it to happen earlier, so it's not going to happen earlier. But S&P goes red in pre-market, 679. But that is his thesis. So he's expecting some chop for the first couple months, then a big rally, then a decline by 20% into October, and then a rally going into December. Maybe that happens. Maybe that doesn't. Yeah, essentially rally during midterms. That's what he's calling for. Which, I don't know, based on, we're going to have to see if people actually want a divided House and Senate, or if they want the Republicans to control it. If the Democrats control it entirely, is the market going to like that? I mean, I don't know. So going into, I guess, midway into 2025, 2026, we'll have a better understanding of how that's going to play out. Bitcoin right there at 86.8. SoFi, that's down about 0.5%. PayPal, that's up 1.42. And then again, the S&P 500 is down. For those that are just joining, the data for this morning was 64,000 jobs in the non-farm payrolls versus 50,000 expected. Unemployment rate is now 4.6% versus 4.4%, which means we officially have a unemployment rate that is the highest in over 4 years. And the question is now going to be, does that increase, and does the Fed work to deal with it necessarily increasing? This is a chart that allows you to visualize it. So again, unemployment since November 2023 has continued to tick higher. We had a little bit of volatility to the downside on unemployment, which is where the Fed was hesitating to cut rates. But overall, as you can see, we are about 1.6% higher since then. And so it's something the Fed can't ignore. Imagine if we didn't get a rate cut with that type of unemployment data. And then if you take a look at this, 162,000 government jobs were lost during the U.S. federal shutdown. This came out from the BLS this morning. So total non-farm was 64. Total private was 69. 162,000 from November 2024 to now is the difference. And majority of that was lost in the shutdown. Does this warrant an emergency rate cut? No, because unemployment, I think, would need to be closer to 5.2, 5.3% to have some massive, we need to cut rates immediately. We cut rates. This is what we needed to do. Maybe we should have cut by 50, but if we didn't cut rates, that would have been the bigger issue. We did cut rates, so that's good. It's just, we better have cut those rates, dude. These unemployment numbers are not pretty. It's not like it's absolutely horrible, but it's definitely not pretty. You also had a headline this morning from Amazon. They're cutting 370 employees in Luxembourg. So that, not massive number of employees, but Amazon continues to cut more employees. 30,000 was the headline in the States back in October. And now you're seeing some more headlines across the entire world. Is Tom Lee still bullish? Yes. It's just he assumes the first half of 2026 is going to be a drawdown. And I think his exact words was, it's going to be tough the first half of 2026. I don't know, dude. It's hard to kind of put an accurate perspective on it. I think, again, you go long and strong if you believe the Fed is going to ease and you believe the AI trade continues to be strong with GDP growth. But to predict the accuracy of a drawdown and then an upswing, it's a little tough to do that. But nonetheless, that is his argument going into the end of the year. Am I actually saying Luxembourg wrong? Dude, am I actually saying that wrong? How to pronounce Luxembourg? I thought I was saying it right, bro. Luxembourg. That's how you say it. This one's not even that hard to say.
Luxembourg.
Oh, shit. I was actually pronouncing the X. Luxembourg.
Luxembourg.
All right. Well, I was pronouncing it like luxury. That's why I was saying the X. Whatever. I guess that's how you say it. It's a wealthy country, though, right? It's a small but wealthy country. I feel like that's like kind of the narrative around that country. That's always been the narrative around that country. Sam says, I tuned in at 5:50 a.m. for pronunciation strategy. Yes, exactly. Yes, I'll be streaming the Robin event at 9 o'clock tonight. So we'll be live and we'll be talking about hoodie. But anyway, that jobs data again, 64,000 versus 50,000. We're going to see how that plays out. Markets so right now are relatively flat. And when the market opens, we'll see if people care. As of now, it doesn't look like the market cares, but whatever hyped up jobs data that we thought was going to happen, flat, nothing too crazy. All right, some more macro charts. Let's take a look at this. And then we'll talk about some of the pain that we had last night and why it happened. So take a look at this right here. We looked at this chart 2 weeks ago when the S&P was, I think, 3% lower than the current levels that we're at right now. Portfolio managers' cash level, as per Bank of America surveys for fund managers, are now to a record low. This is a record low since 1999 at 3.3%. At 3.3%. This means that portfolio managers are all in, essentially, right? They have completely used and deployed their ecosystem of resources to buy the dip and buy the market, which, by the way, makes sense. The S&P 500 is basically at all-time highs. I mean, I know we're not literally there, but we basically are, and it doesn't feel like that because CoreWeave's down, Nebius is down, Tesla, even though Tesla was up yesterday, so that's not a good example, but NVIDIA is down, and all these other sort of high beta tech stocks are down, Broadcom, Oracle, et cetera. The difference is what's holding up the S&P is Eli Lilly and JP Morgan and Walmart. And so that's why a lot of individual investors that are not long those names probably don't feel it. But it's hard to argue that the market is against you right now when it's holding all-time highs, basically, but tech is not cooperating. The inevitable thesis that has to come to conclusion is that there is a rotation, which is, I know it's annoying as hell for people to hear that, but it is what it is. And I think the derivative of that question is like, okay, should people rotate then? Should I rotate? Should you rotate? And I think the only answer to that question is, are you managing the portfolio for a short-term rotation trade? Because look, if you think you're super overweight NVIDIA and you need to rotate into like healthcare and get Eli Lilly, then sure, if you feel like you have way too much NVIDIA, like NVIDIA is like 80% of your portfolio and you're just way too exposed and you want to trim, then sure, that's fine. But if you don't care about Eli Lilly or JP Morgan or Goldman Sachs, or any of these names that the market is rotating into, and you have fundamental thesis on NVIDIA or AMD or Broadcom or whatever you're in, and you have a relatively strong average, so you have a margin of safety if the stock falls, then the rotation ends up becoming something for fund managers, not necessarily for individual long retail investors. And I'm not saying you can't operate as a fund manager. It's just like, do you actually, because then you have to rotate out of it eventually, unless the call is Lilly and JP Morgan outperform tech all of next year, which maybe that's the case. But I mean, maybe that's not the case. Eventually, you're going to have to find a way to get back into those tech names, and you might not be able to time it as correctly. So I don't know if the rotation is something necessarily people should take seriously, but it is an explanation for what's happening. And it's not like you can deny that. I'm not buying Goldman Sachs at all-time highs. I'm sorry, but I don't care how much financials are in favor right now. I'm not doing that. A, because I don't know enough about Goldman Sachs as a business. B, because I'm not selling NVIDIA that I bought at 130 to buy Goldman Sachs at 900 when I know that NVIDIA is cheap. But can I acknowledge that the broadening of the rally and the diversification of the rally is healthy for the market, even if my NVIDIA doesn't go up to 200 anytime soon? Yes, 1000% I can. And I'd rather have that happening than the entire market going down because there is no liquidity that's coming into other sectors rotating out of the max up. It ultimately just comes down to like, where is your conviction going into next year? SoFi, that one's down. Again, the big news yesterday in the fintech world was PayPal is starting a bank. I think it's actually bullish for PayPal. I mean, at the end of the day, PayPal should be able to meaningfully, potentially monetize those loans. And if they can monetize those loans effectively, then you're going to start to see more and more people potentially gravitate to PayPal to get a loan. I don't know if it's necessarily bearish SoFi, but I feel like the market's interpreting it as bearish SoFi. And so that's why SoFi is getting hit in the pre-markets. But PayPal becoming a bank is the most PayPal thing that could possibly happen. Because it's freaking PayPal. Dividend, becoming a bank, buybacks. That's what they're doing. Yesterday, I was told by my cab driver that his whole portfolio is in CVX, and I asked him why, and he said he heard it's good, and that made me realize most retail doesn't care and know what they're in. CVX. I feel like I've heard of this stock before. Oh, Chevron. His whole portfolio is in. That's probably someone like close to him told him Chevron's a safe company. Everyone's going to need oil and gas. That's probably why he's in it. It's better than him saying some random tech stock, though. It's better than him saying Oklo. I'd rather him be in Chevron than Oklo. And, that would be less bubblish. But yeah, dude, a lot of retail, we are a special breed of people that actually care about the stocks that we're in and really do due diligence and look at them for the most part. A lot of people don't. A lot of people get a tip from their friend. They're like, all right, cool, I'm buying. And I'll do that here and there with like VG, but that's with like a couple $1,000s. Like when you're talking about massive, decisions with your portfolio and you're talking about real percentages, that's when you got to know at least a little bit about the company. I think that's, what we're all trying to think about as well. Pays a dividend as well. That is true. It does pay a dividend. He is a cab driver, so fuel prices. Yeah, there you go. That's also there. China, what's happening in China? So Lisa Su is in China as of yesterday. So I guess she's trying to get some deals done for AMD, just like Jensen was trying to get done as well. And part of the reason the Chinese might be more excited to give her some deals and prop up their economy is because youth unemployment in China is at its highest in over a decade. Oh, sorry, this is not China. This is the UK. There was a different chart for China. However, we can still talk about it. China's unemployment rate came in at 5.1% yesterday. That's why I mentioned China, and that's also not the best. The United States now at 4.6%. So, we're catching up with China. But part of the reason why the Chinese might be wanting to make some of these deals with these tech companies is because they understand that their unemployment rate is not necessarily doing that well. The UK might be wanting to make some of these deals as well because UK unemployment has reached 16% in the past 3 months to October. 735,000 16 to 24-year-olds are unemployed. This is the highest since 2015 in the United Kingdom. Nearly 1 million young people are now not in education, employment, or training, and the national living wage for 18 to 21-year-olds is set to rise another 8.5% in April of 2026. Now, the UK and the United States also canceled a deal that happened yesterday. Yeah. Technology deal with the UK. The US has suspended implementation of a technology deal struck with the UK during Donald Trump's visit to Britain, growing frustrations in Washington over the progress of trade talks with London. So I think this is actually going to be a bigger story going into the beginning of 2026 than the China negotiations with the United States. You've got a lot of the European digital tax now being imposed on the tech companies. One of the things that Trump was trying to do in the tariff negotiations, and if the Supreme Court overturns that, that's going to bring up a whole other host of issues, was try to get European countries and the UK to not, effectively tax Elon's X just because of a blue check mark, for example. In Canada, you still can't see certain parts of the news on Instagram. Someone was showing me their screenshot the other day, like they can't see Bloomberg News in Canada because of the Canadian laws that Meta didn't comply with. So like this stuff is still a big deal, and we're going to see how much of an implication it has for the tech companies going into 2026. But obviously, if unemployment is ramping up in the UK, you would need companies to invest in the UK to start hiring people. Maybe those companies could be tech companies, but it's going to be hard for them to be tech companies if the tech companies feel that every time they try to do something, they're just going to get fined. So I think that's going to be a broader question that we see going into 2026 and, where the market ultimately takes it from there. Data centers. The market wants to build more of them. The administration is trying to continue to build them. Here is an update on how the House in the United States is proposing a bill to build more data centers.
And powering data centers, it could become much faster under a measure that the House was seeking to advance today. Now, this bill would do a number of things, but overall, it shortens timelines to get permits by limiting environmental reviews, and that includes legal challenges to projects. And that could allow data centers to get online much faster. The Data Center Coalition says that while building a data center can take roughly 2 years, building power can take up to 5 years, and transmission can take up to 10. I spoke with Congressman Bruce Westerman. He's the sponsor of the bill, and he said that it will also help increase energy production, which could lower electricity costs in areas with those data centers.
These data centers use huge amounts of energy. What we want to do is be able to protect residential and commercial and industrial consumers and not have a spike in energy costs because the demand gets so high and we can't supply enough.
While there is a widespread support for the bill from OpenAI and Micron to the Chamber of Commerce, the bill does face a major hurdle today because a group of Republicans from coastal states say they will oppose advancing the measure because it has a provision that would limit the Trump administration's ability to block offshore wind projects. Now, if Republican leaders in the House can find a way to sway their members before the procedural vote, the permitting reform bill is likely to get bipartisan support when it does get a final vote later this week. Frank?
So, look, the interesting thing about that is, once again, for those that are bearish the AI data center trade, the administration is making sure that at every point they are incentivizing people to build. It goes back to that conversation that Trump was having with what's his name, with Zuckerberg at the White House, and he was like, "How much are you ready to spend on data centers?" And he wanted Zuckerberg to say a big number, and I think Zuckerberg said like 600 billion. Like, Trump loves it when these tech executives say that they're spending a lot of money. And so every incentive that's going to be baked in for the data centers is going to be rooted in how can they continue to spend more money, which should be good for CapEx, should be good for GDP, should be really good for NVIDIA, AMD, Broadcom, et cetera. Should be good for the power companies, utilities, but it also should be net good for the AI trade. We just have to see if, that excitement and momentum continues going into next year. Our boy Michael Burry, though, is once again tweeting about GameStop. I mean, this is at this point it's becoming hilarious to me that GameStop is his fresh idea over anything else in the market, and everything else is ridiculously overvalued, but GameStop is the argument. So, I mean, look, I'm not saying GameStop can't do well, but to shill GameStop and to say NVIDIA's a fake company, I don't know. It's a little weird to me, but nonetheless, that's what we've got going on. So that continues to be his argument against the broader AI theme. Is this bullish for CoreWeave? Yeah. I mean, look, all the data center stuff that we're seeing is bullish for CoreWeave. The problem with these data center plays is that, once again, by the way, Kathy bought a lot of CoreWeave yesterday. They're getting lopped into the same bucket. So whether it's CoreWeave, Nebius, Iran, which Iran has just been absolutely destroyed from that high, unfortunately, 34. If this thing falls below 30, I think that's one of the worst stocks we've seen this year from peak to trough. Now, it would still be up 3x for the year, but my goodness, it just absolutely got decimated. And I don't even think it's necessarily Iran's fault. It's more so the market got so hot on these data center plays that it needed to cool down. And the cooling down inevitably became, an over 50% decline. So they're all in the same bucket. And because they're all in the same bucket, that's where there is no nuance to like CoreWeave or Nebius or Iran. I mean, maybe there's some individual differences, but the way they trade is in the same way. Kathy's pick is CoreWeave. She bought 136,000 shares yesterday. She bought 143,000 of Circle, bought Square, Coinbase. She bought 550,000 of BMNR. Yeah, APLD got wrecked as well. And then she sold Tesla, SoFi, and Shopify. So I get the whole rebalancing thing, but I don't really get the decision-making process here of selling Tesla, SoFi, and Shopify, and then buying this shit. It was just a little confusing, but that was, I guess, her rotation that she engaged. I mean, Square, really? Square. Out of all companies, Square. Like, Square's down 26% this year. Maybe that's an opportunity, but maybe that's also like, hey, wait till Jack Dorsey actually proves that they can run it effectively. Selling SoFi too is weird here. Like, I don't know, guys. And you guys know I am not the biggest uber bull on SoFi. Like, there's a reason I picked Hood over SoFi years ago. But even I am just like, I think this is a buy. Are we really going back to 20? Like, I don't think so. Now, I think the one thing this stock has been phenomenal for, and I know a lot of people use it for this, is covered calls, because for covered calls, you need a stock to stay in a range. And although Hood has better premiums, Hood goes up and down violently. So like the covered calls end up getting screwed many times. But for SoFi, I mean, with covered calls, almost for the past 4 or 5 months, you've been safe. So I think that could be another reason people buy it. But I do not think this thing should be anywhere near the low 20s. Now, anything can happen if we have a broader meltdown, but I think this one should be relatively okay. Again, jobs data for those that are asking is 64,000 versus 50,000 expected. So we do have more jobs than expected. Market's not really caring about that. Unemployment rate did go higher. 4.6 versus 4.4, highest since July 2021. It's just not that intriguing, this data, because it's like all of it encourages the rate cut. We got the rate cut. We got a dovish Powell going into the rate cut. Powell probably knew some of this jobs data was not the best. And so it is what it is. It's kind of a nothing burger now. I think the more interesting story today is, do we continue the pain from yesterday night, as futures were, highly getting, I guess you could argue, discombobulated. They were going up, they were going down, then they ended up going really down. Then they started to recover a little bit around 5 a.m. But does that pain kind of continue as we get into the end of this week, or not? Is Grab actually below 5 in the pre-markets? I just, again, there's not much I can do to explain that one. I have zero idea. Wow, below 5 again. I don't know. I really don't know. This one is just as confusing as a lot of the other names that are out there. The one that really gets weird about this, and again continues to make me believe that there is some larger force that's going on there, is that it was at 650 in September. Billion shares traded. And 650 is like, look, I'm not an expert on valuations, but 650 is not Oklo at 198, right? That's not some egregious valuation. That's like, oh my goodness, this is crazy. You got the go-to meeting coming up tomorrow, where we might get a little bit more clarity, but it's almost like a lot of these names that are losing any sense of premium they had going into the end of December. It's hurting algorithmically a variety of different other names that barely had a premium but are now getting hit. Yeah, maybe putting the scarf back on. We'll save it. The wheat stocks did get a little bit of a move yesterday, but then they got hit. They're up right now in the pre-market. Trump did confirm he's trying to schedule marijuana as a class 3 drug, but the wheat stocks kind of have already priced that in. So we're going to see. We got 2 weeks left. I mean, again, Grab on a risk-reward basis. All I can do is continue to hold. There's not much you can do. Sometimes you got to go through this stuff where the stock is not cooperating with the fundamentals. If there was a fundamental reason I felt it should be down, I would say it. I just cannot find that fundamental reason. Especially given, it wasn't down in September and we had a complete reversal, but that's the way it's trading right now. And until that changes, it continues to be stuck in that category. Netflix as well continues to go red on the day. 93.77 yesterday, 93.65 right here. That one again is down on the day. Is there any FX risk to Grab? No, I wouldn't think so. Not in an immediate way. I mean, the Dixie being down is actually relatively okay for Grab, and we're at 98.10. The lowest we were at was 97. So we're not at like 115 on the Dixie like we were back in January. So I don't think for any of the international stocks that's a risk. Where's Nubank? Are we still at 16 on Nubank? Yeah, Nubank's still holding 16. So yeah, I don't think the international stocks are worried about that. But eventually the market's gonna have to see where they want to take these names going into the end of 2025. Kevin live. Let's hear from him and see what he's got to say about the current state of the economy as well.
With the rest of the world. would you give us a pledge right here and take it down 150 basis points right here, right now? Why not say that's if I get the job, that's what I'm going to do?
Oh, well, I think obviously if I were there, then I'd have to negotiate with the rest of the committee members and see what kind of a consensus could be driven. But I think that if you do really careful economic analysis and think about the difference between supply and demand shocks, then you can see that there's lots of room for lower rates. And this is a huge mistake that Janet Yellen's Fed made in the past, where they said that the Tax Cuts and Jobs Act was going to be inflationary. You go back and look, we got 3% growth and 1% inflation after a big supply side shock. And I think that's what could happen again.
We were talking a bit earlier on the show, Kevin, about the Supreme Court case involving IEEPA. Parrott obviously issued tariffs. I'm just curious as to how you're thinking about that. Should that not go the administration's way, given the importance it's had, as you've pointed out, in potentially reducing the deficit and obviously raising revenue?
Yeah, well, first of all, the deficit news has been really fantastic. And it's kind of funny because for the longest time, at least like the Democratic think tanks, they'd be telling you the only thing that matters is the deficit. Well, if you look at what's happened so far this year over year, by the calendar year, we're going to see a deficit reduction of about $600 billion. Multiply that by 10 and let there be a little growth. You're looking at 7 or 8 trillion in deficit reduction over the decade because of the policies we've adopted this year. About 1/3 spending cuts, 1/3 tariff revenue, and 1/3 Laffer curve-like growth from the tax cuts. And so, with that big deficit reduction, then there's lots of room for inflation to go down. And so on. And so my view is that the deficit reduction is a key to the health of the economy, to lower rates. And if the Supreme Court were to do something about that, we've got backup plans, but it would be disruptive for a short while. Bottom line, though, is that we're highly confident that they won't do that, because in the end, there are two questions before them. One, is it an emergency? And how is it not an emergency if fentanyl's killing hundreds of thousands of people and if the trade deficit is making towns into ghost towns? And then the second thing is, does the language that says that we have the authority to regulate trade mean that we can use tariffs? But how else are you going to regulate trade if not with tariffs? Maybe you would say, oh, you would use quotas, but if you take quotas and auction them, then that's like a tariff. So it feels like the Supreme Court won't have anything to point to toss out the case. We're pretty confident that it's going to go the way we want. But if it doesn't, we have backup plans.
You do? Yeah, I mean, because there is a cogent argument that the other side has made in terms of some of the arguments your side has made that says, no, these are not emergency powers. So what are these backup plans? How much can we assume that you're going to be able to maintain the same rate, let's call it, of revenue coming in as a result of tariff-related things, if in fact it's deemed illegal in terms of the powers that he's using right now?
Right. Well, there are things called 232s and things called 301s. And we have all these specific agreements with specific countries, which we could take those one by one without, like, if a country agrees to pay us a tariff, then that's not necessarily something that requires our IEEPA authority to impose it. And so we've got deals, we've got 232s, we've got 301s. If we have to, we can put it all back together, but we don't think we're going to have to.
All right, so Kevin, we know that the president seemed to be uncomfortable with the way that he had to deal with Jay Powell, and Jay Powell being, listen, I'm very separate, I'm not taking the answers. I think the president's kind of a head coach, and if you got that job, you're a player. Now, if the head coach says, listen, you're going to have to go this way, and this way is to take rates down 200 basis points right now, are you going to tell him, no, coach, I'm not going to do that?
The bottom line is that I talked to the president. When he says we could do this or we could do that, then he always has a reason, and you know that, Jim. You talk to him too. And so the point is that if he's got a good reason, and if I were there and I found that I agreed with the reason, then I would present it to the others and see what they think. But the Federal Reserve's independence is really, really important. And the voices of the other people at the FOMC, they're important too. And so the way you've got to drive interest rate movements is with consensus based on the facts and the data. And I would say that that's something that has been not really working so well for the Fed over the last few years. Like, what are the facts? So when they made a mistake on this or that, then why did they make that mistake? What model got it wrong? That's the kind of stuff that becomes convincing over time, because you actually have a track record of getting things right. And when you get things wrong, you explain why and fix it. And so that's the way it moves forward. But the president is a seasoned observer of the economy, and if he has a good point, then I'm sure others will recognize it as such.
We were just talking, Kevin, about onshoring and waiting for more progress on that front. Manufacturing jobs in November, that's 7 straight monthly declines. Do you expect that to reverse in 26?
Yeah, it's definitely what we're seeing is you saw the increase in construction. We've been tracking groundbreakings of all these factories that have come forward from both the trade deals and like the drug companies onshoring production for national security reasons. And we're up to around 30 groundbreakings in September. And all of those are going to create a lot of jobs moving into next year. So, I think that we're highly bullish on things going forward. And don't forget that the government shutdown is a time of heightened economic uncertainty where a lot of people just sort of hold off on hiring, hold off on this and that until they see that we're actually going to get the government up and running again. And so I think that the data that we're looking at now is partly colored by the government shutdown, and the bounce back from that is something that I think all observers should expect.
The Commerce Secretary's been on with us lately, suggesting maybe 6% GDP in 26. The president the other day in a meeting said, why can't there be 20% or 25% GDP growth? What is the street supposed to do with that kind of number?
As an abstract thought, I don't know what the highest growth ever is, but I doubt it made it to 20%. The bottom line is that if you go bottom up and you say, what's productivity growth right now? I think because of AI, it's maybe 2.5% to 3%. What's capital stock growth right now? It's probably around 1%. What are we getting out of labor? It's probably around 0.5% to 1%. So you're looking at the sort of supply side of GDP going into next year, telling us that we need to have a number that's north of 4. And so that's about as far as I think that I'm willing to go.
You mentioned AI. Obviously, the economy is a beneficiary of all those data centers being built to power it. But there is this existential question, Kevin, that I'm sure you have to be thinking about, which is what is the impact going to be on employment? Even if we ultimately end up longer term with more jobs, there could be a very significant dislocation in the labor force. How do you think about the impact of AI when it comes to the introduction of efficiencies that ultimately seemingly will replace many human workers, at least over some period of time?
Right. Well, what we're seeing right now, right, is that the workers who are trained with AI have increased their productivity a lot, which gives us that productivity growth I was talking about. And they've also increased their wages a lot. You saw there was really a blockbuster wage growth in this employment report. And so that's a big positive. And the way I think about that happening is that every worker has like a really great AI coach standing next to them saying, hey, do it this way, do it that way, disregard the advice of Kramer. And then, wow, their productivity goes way up. But then over time,
he just diss Kramer to his face.
Over time, then there's a question of if I've got all these workers that are really productive, then maybe I don't have to hire a new guy because the guys who are here are already producing more than is demanded. But in equilibrium, what happens is GDP goes up, incomes go up, demand goes up, and we find positions for people who maybe move to a different factory or
All right, so you got Hasset relatively bullish on 2026 in terms of the labor market, GDP growth. Again, the jobs data for those that are just joining. Good morning to everyone that is here. 64,000 versus 55,000 expected, versus 50,000 expected. Unemployment rates at 4.6 versus 4.4, the high since July of 2021. So far, markets had zero reaction. Let's do the green or red poll in the chat, and what do people think? Unfortunately, yesterday ended up being red for a lot of tech stocks, excluding Tesla and Nvidia. Overall market was relatively okay. And then overnight in the futures, that kind of continued. Tesla actually ended up getting to like 465 last night. So you did have the futures show some pain. Do we think that continues? Do we think that continues? Also, to show you guys a couple pieces of hope, we only got 3 minutes until the market opens. 2 stats I want to show everybody. Number one, if the market has bought 2.92 million puts on the S&P 500. Every time 1 week later, S&P is up 3%. This has happened 7 times in history. The last time was November 20th, 2025, when the S&P 500 put volume exceeds 2.297 million in a day, which is what happened on Friday last week. A week later, we're up 3%. If that's the case, then we're going to 7,000 by the end of the year. If this math historically follows the same precedent. If not, then we're going to see. So that's one piece of hopium for everybody. And another piece of hopium, this is from our boy Ryan Dietrich, is that December 15th tends to be the bottom for the last 2 weeks of December. So December, as you can see right there, this is going back to 1950. December 15th, which was yesterday, tends to be the worst of the last 2 weeks of December. Maybe that helps us going into the end of the year. Maybe it doesn't. Again, I've been saying this for the past couple of months, but one of the reasons December historically is good is because September and October historically are bad. So December is kind of recovery from those lows. September and October were actually pretty damn good this time. We were up about 1.2% in each of those months by the end of the month. So there is a little bit of nuance to this version of the bull market, and we're going to see if this one continues. But if so, today's December 16th, and we are going to see if there is any level of momentum this market can catch on to, or do we continue red? Do we continue in the same trend that we've had since Friday? NVIDIA right there, barely green right now in the pre-markets. That one's losing a lot of momentum. Tesla is red as well, 472. Robinhood's actually holding a little bit of green. We'll see if that can hold. Robinhood does have an event today at 9 o'clock. I'll be streaming that live, so that's going to be important for Hood. But today's going to be a big day to see if this can continue or if it continues back into the trend of the red that we saw a while ago. Which, again, it's not horrible types of red. S&P at 680 is not S&P at 650 like we were in November. It's just the tech stocks are the one that are not getting a lot of the love as we've seen for the past couple weeks in December. All right, here we go. 30 seconds. Thank you, everybody, for being here. I know everyone wants this Santa Claus rally. Maybe we'll get it. Maybe it's a Grinch rally. But today is another day and another opportunity to see where the market wants to go. Unemployment at 4.6, highest since July of 2021. Non-farm payrolls, 14,000, better than expected. We're going to get PMI in about 15 minutes, and we will see how the market ultimately reacts to it. Thank you, everybody, for being here. Tuesday, December 16th, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. S&P 500, 679.71. 679.71, trying to go green. It does go red. It's up a little bit from the pre-market at 678.80, but we are still red on the S&P. Grab goes green above 499 to 505. SoFi goes green from 2530 to 2587. IREN goes green. CoreWeave's trying to go green. Rocket Lab down 1.5. Goldman Sachs is green. NVIDIA goes red. NVIDIA goes red. Hoodie gets a little bit of a bounce. Again, there's a big event tonight. Maybe the street's pricing that in, but this could easily reverse if the market is once again going risk off on high beta. PayPal, they officially signed up for a bank, so that's why that's getting a little bit of love, 61.63. That's up 1.4%. Bitmine's up about 0.5%. Bitcoin at 87,000, up from 86. Palantir is flat on the day. Broadcom, a little bit of a green candle, but still red, 339. Ford is getting rid of their EVs. They are taking a $20 billion charge off on their EVs. So you got Ford basically completely stopping production of the EV. The stock's actually up on that because the street likes it, but they are giving up on their EV endeavors. Applied Digital, that's up 2%. Galaxy, that's up 1%. Nebius down 2%. Nebius now below $80, 79.56, as Nebius was like 94 back on Thursday of last week. Abercrombie, that's down 2%. Lululemon, that's up a little bit. Apple, that goes down. Apple from 287 to 273. So Apple goes down as well. CoreWeave is red, down 3%, 70.13. Did we hit below 70 last week? Yeah, we got to 65 on November 21st. Okay, so it's crazy. November 21st was when extreme fear was fear and greed was like at extreme fear. It was at like 4, and the S&P was down 5%. A lot of these high beta stocks are getting back to that November 21st level, but the S&P is nowhere near that. 680 on the S&P. So it goes to show that, I mean, the obvious answer and explanation for that is rotation. As much as people hate to hear that, people absolutely have rotated at the CoreWeave into something like Lilly, Amazon going green on the day. And that's why CoreWeave is once again revisiting those lows when the entire market was taking a dump. Now it's like CoreWeave's taking a dump, but the entire market is not taking a dump. which is an individual problem with CoreWeave and all the other sort of high beta plays versus the actual market itself. SMCI, that goes green on the day. Amcor, that's down 1.3. Eli Lilly, that's down a little bit. JP Morgan, that's down. Netflix goes green. 93, 94, a little bit. Rivian down after being up 20% of the past week. Uber once again continues its struggle, 81.50. Uber didn't break below 80 yet, but it looks like it wants to lift right there at 1922. Lyft is only down because of Uber. Again, the Waymo robotaxi stuff from Tesla, definitely a little strain on the stock. Walmart, that's flat. Microsoft once again down 472. Microsoft was pushing 482 yesterday. Tesla, wow, 466. Not able to hold the 470s. This was the darling of yesterday. This thing popped up to 481. This December 17th last year is when it hit 488 all-time highs. Let's see if it can recover, but 467, not able to hold that 470 level yet. IWM, are we green? IWM trying to go green at 251. Again, maybe a little bit of rotation out of tech into small caps, which I don't understand that type of rotation. I mean, I get the small caps are undervalued, but I would sleep well at night with some of the tech names over small caps. But you see some of that rotation happening, and then you got NVIDIA continuing to be red. Everything's going to dump for the week. We are following the Tesla trend. You know, that's exactly what happened last year. Last year, Tesla was the only tech name to pump, hit an all-time high December 17th, and then it dumped, and the market dumped. And the market ended up somewhat recovering towards the end of 2024, and we ended up having a decent year, but it was not that sort of strong finish that everyone thought it would be. But Tesla's really got to get to all-time highs tomorrow for that exact playbook to play out, which, we'll see if that happens. SoFi trying to go green, 25.90. That's up a bit. Rocket Lab, 2% down from 65 to 54. Hoodie, I don't expect Hoodie to stay green, to be honest. Not with everything else dumping like this. Maybe Hoodie's getting some sympathy green because they have an event coming up today and the street is excited about the event. But outside of that, I don't know if that's enough. Ondas is up 5%. Okay, this is one of the high beta names that's making a move. Gold and silver, once again, absolutely soaring today. Look at gold, very close to its all-time highs, 43.30, up another 0.5%. Silver still holding 63.81. So it's not like those two assets have slowed down as they are continuing a lot more of their momentum. RZLV, this is an AI name, if I'm not wrong, right? RZLV. Yeah, Resolve AI. This is up 27%. There might be sort of a fundamental catalyst here for that one to be moving. But that one is another small cap, right? Small caps are kind of getting a lot more love than not. ARR expected to exceed 200 million. December revenue expected to exceed 17 million. Looks like those preliminary projections are why that stock is making a move. Oracle is green. That's nice to see after 3 days of red. And then Broadcom, green. Okay, after 3 days of red. 344 on Broadcom. Looks like buyers are finally stepping in on Broadcom and Oracle. Not helping the S&P yet. SoFi back over 26. That's good. Hood as well. I mean, whether it's the event or not, Hood is holding on to some green right here. High of days, 117.43. Tesla, you got a green candle, but it's not officially gone green yet. Broadcom and Oracle might be your leading indicator that the market wants to go green. But we're going to have to see if that actually plays out. Zeta goes green. GameStop goes green. Starbucks goes green. Big Bear AI goes green. Intel goes green. Lyft just went green. Dell just went green. Microsoft still red, but it looks like it's got a candle to the upside. BABA down on some of that Chinese news from yesterday. And then Oklo goes green. It's a bull trap. We've had many bull traps over the past 2 weeks, so it would not surprise me. Look at Tesla, 470. I mean, if it's a bull trap, you need Tesla to definitely go green on the day. So let's see if that can end up getting there. Broadcom, 346. Okay, that's a pretty violent move on Broadcom up. And the only reason it's violent is because this thing is not at a 2% up day, literally in 3 days. And if it were to get any level of movement, immediately it would get crushed. So from 338 to 347 right there, that looks like buyers are stepping in. Same thing for Oracle. Not as good of a move as Broadcom, but that is still a bit green. Meta 648. Meta slightly up. CoreWeave, is that flipping? CoreWeave's trying to flip, but that one's still down. Iren goes green, still below 40, but goes green. Then Nebius just above 80. Just above 80. Yeah, we'll get PMI in about 7 minutes. The expectations on PMI, let me pull this up right here, is we're looking for PMI 54.2. So we got to be 54.2. We'll see how much of an impact it has. I mean, PMI tends to have an impact, but then the impact ends up not mattering that much. So we'll see if the numbers are really ugly. Maybe there's a deeper impact. If not, then maybe we reverse. S&P once again goes red, 679. Grab below 5. Rocket Lab 55. Rocket Lab actually flips up. NVIDIA is also still red. Dutch Bros is up 2.4. This was stuck at like 58 for the majority of the past couple weeks. That one's up now. Carnival Cruise, that's up. The cruise lines have been having a great week. D-Wave and the quantum stocks got upgraded by Jefferies, or not upgraded, they initiated coverage. D-Wave got a $45 target and IONQ actually got a $100 target. So Jefferies has gone bullish quantum, and that's why you're seeing the quantum names get a bit of a boost here today as some of the institutional guys are getting into the quantum stocks. So those are all green on those upgrades or on those initiations of coverage. Palantir just went green, 183.50. Bank of America reiterated their $255 target for Palantir yesterday. VG, that's up a little bit. Galaxy, that's up 2.4. Affirm, that's up 3.3. Celsius goes red. Lulu's red. American Eagle up 130% this year. Sydney Sweeney was the strategy. You know, I remember looking at American Eagle at 13. I think all of us were like thinking about it a little bit. And the Sydney Sweeney catalyst, it went from like 10 to 13. Should have just trusted Sweeney. If we had just trusted Sweeney, we would have a double waiting for us on the other side. It's one of the few examples where like marketing and picking a influencer like legit changed the, because I don't know if American Eagle sells the amount of clothes they sell without Sydney Sweeney being plastered all over their marketing. Like I really do think she was an instrumental part of getting people into the store. But that was a massive win for the year for retailers. And then Elf right there, 78.76, as that is also going green. It was not Brent Hill from Jefferies. It was someone else. I don't think Brent Hill would have been super bullish on quantum, but it was someone else from Jefferies who. The point is, at least institutional coverage on these names continues to legitimize them, right? So that's the more bullish view of those upgrades. SoFi right there, 26.29, rebounding from 25.30. So if you bought a 25.30 in the overnight markets, you got a little bit of a 2% move right here. Google, are we holding 300? We're holding it, $6 above it. I don't know if she wants to easily hold it. Broadcom's decline is what kind of affected Google, which is so stupid. Like Broadcom going down for whatever reasons they have is not realistically affecting Google, especially because everything they said about the TPUs was bullish. But you do have Google that fell in sympathy. By the way, there was another update on NVIDIA from Goldman Sachs today. So according to Goldman Sachs, they expect ASICs to take up 20% of the overall chip market via AMD, Broadcom, and Marvell. NVIDIA, they expect to dominate the other 80% of the market going into the fourth quarter of 2027. So they continue to believe that, yes, ASICs are taking more share of the market, but that share of the market is insignificant compared to the overall pie, which NVIDIA should be able to get a decent chunk of if they continue to execute. So we're going to see if that continues. Nebius down 1.2, Meta's up. I don't trust the hood green yet. I don't trust any of the green here today. None of this is really that consistent with what we had in the pre-markets or yesterday, and there's no catalyst. Now, PMI maybe could shift it. Also, why is hood green but NVIDIA is red? Like, that doesn't make sense. These names tend to trade together. You see got a lot of just wonky behavior. Tesla's trying to go green, but it keeps getting rejected. The data center stocks went from green to red, then red to green. Now they're back red. Like, it just feels choppy like it was yesterday. Trust issues, 100%, dude. 100% this market. Oh, look at the S&P, low of the day right here. Okay, so PMI is coming out in 3 minutes. Maybe that reverses or maybe that forces it to continue. But like, how is Hood holding 2% while the S&P is down 1/3%? That's just not, it's hard to trust that. Absolutely creating some trust issues. I have covered calls on Hood, but it's on so I bought back a lot of my covered calls on Hood, given I'm taking advantage of the price decline. So I would say my Hood position is now covered 30%. 70% of it is uncovered. Roughly. I just did the math, roughly. So the far majority of it has no covered calls on it. So we're going to see. We're going to see by the end of the year kind of the strategy I take on that. But obviously, if the market's getting hit, Hood's probably going to get hit with. And Meta right there, 647, Nebius 80.3, and then Google at 306. Amazon, does it continue to hurt us? It continues to hurt us. 222. This thing is up 0.1% for the year. No, not even that. It's down for the year. That's 0. It's, oh no, never mind. It's up $2 for the year. Okay. So started at 220. We're at 222. Phenomenal. Phenomenal for Mr. Amazon. All right, PMI, S&P is getting hit. I'll leave the screen on the S&P. I will get the PMI. It should be coming out in literally 40 seconds. Let's pull this up. Amazon's got to go back to selling books. Oh my gosh, yeah. Cloud computing with 36% operating margins is not enough for the street. All right, so global PMI, we want 54.2. Manufacturing, we want 52.2. And then services, we want 54. Those are the three numbers that we are looking at, and we should be getting them soon. Like literally right now. I don't know if they're going to have that much of an impact. I think they will have somewhat of an impact. It depends on how, like, again, the labor data really didn't have an impact on the market either because it came in line. So we have to see if this one has the same impact. Still don't have the numbers. Oh, I got it. Okay. Looks like these are beats. Composite 53 versus 53.2. That's a slight miss. Services 52.9 versus 53. That's a slight miss. S&P is not really reacting. And then I'm waiting for manufacturing. 51.8 versus 52. Wow. They all came in like 0.1 to 0.2 below expectations. 53.2, we got 53. 52, we got 51.8 on manufacturing. 53, we got 52.9 on services. I mean, literally, they all came 0.1 to 0.2 below expectations. It's kind of suspect, if you ask me. It's a little suspect, but I don't think the market cares. Does the market care? Yes, the market does care. There's your red candle, at least for now. There it is, low of day S&P. Robinhood's falling. Meta went red. CoreWeave below 70. Iran below 35. Nebius below 80. Ondas was up 5. Now it's up 1. Tesla just went from 473 to 470. SoFi trying to hold on to 2612. Coinbase, a little green right here. Oracle just went red, now flipped green again, but basically flat. Broadcom, dude, Broadcom was at 347, right down to 342. Imagine you took the day trade at 347. You're like, all right, I see a path to 350, and then boom, you get whipsawed down $6. This is why knowing these pieces of data is important, especially if you're trading these intraday, because that data really, whether it's justified or not, determines, at least in the short term, if the trend is up or down. S&P still low, 678, bounced off 677, but still down 0.34%. I don't know why Circle's up on the day. Up 6%. I didn't see any headline. I'll see if we get anything, but yeah, Circle is one of the only crypto names that's up. Oh, wow. Eric Jackson is starting a crypto treasury. Well, we definitely needed that to happen. So Mr. Eric Jackson will be starting a crypto treasury. Jackson will serve as the chief executive officer if the transaction closes expected as next year. He also may hold a small percentage of its holdings in stocks like Carvana. And he will be focused on buying altcoins that have 1,000x potential. Okay. Well, I guess we got that to look forward to in 2026. S&P rebounding here. Look at that green candle. Getting a rebound, 679.80, potentially 680. Circle Stable and Visa working on the Solana chain. Okay, that's her headline. Circle Stablecoin is working with Visa on Solana. I actually did see a Visa headline this morning. I forgot about that. Yeah, that makes sense. Okay, so Circle and Visa collaborating. And that's getting you some momentum there on Circle. S&P, is that fake or is that real? That's the question. Is that green candle fake or real? NVIDIA just went green as well. Well, at least NVIDIA's joining the party here. Google also up a little bit. Wow, S&P just got rejected right there. So choppy, bro. So freaking choppy across the board. Let's get some more on PMI. But right now, I don't think we have a trend that is easily defined yet.
We're expecting 54 in the rearview mirror, 54.1, 52.9 equals where we were in June. To find a lower number, you're going back to April of this year. And finally, on the composite, 53.9 expected, 53 is what arrived, and 54.2 is last month's final read. So another one, all three sequentially lower. 53 would be the weakest since this June. But there is a bright spot here. All three are in expansion mode above 50, but they are all less than expected. We see the yield curve holding some of its steepness from this morning's jobs report.
I need a tie like that. I absolutely need a Christmas tie like that. But yeah, you're not seeing yields necessarily make that big of a dent. 10-year, it was at 4.17 in the morning. It's at 4.18. So the 10-year and the bond market not caring that much about PMI. Again, those PMI numbers basically are a nothing burger. They missed by less than 0.1%. So you're not seeing a massive market reaction to it. You did see a little bit of a stock market reaction down, but then you kind of got a bit of a reversal here. Tesla went green. Did we go green? Tesla very close to going green. Look at that. 468 to 474. I mean, if it can hold this trend, that would be very, at least in the short term, bullish for Tesla investors. 30 cents away from going green on the day. Yeah, the 10-year yield was rising before the PMI. Yep, Tesla goes green. Okay, so Broadcom slightly green. Google just went green. Hood and Meta continue their green. NVIDIA holding green. And then Tessie goes green. Ethereum, a little green. And then Bitcoin back above 87. Hey, Bitcoin actually a nice candle. Look at that. From 86.3 to 87.7. Almost $1,700 candle right there on Bitcoin. Lemonade is also green, up 7%. Okay, maybe a little reversal. We got to see if we can trust it. S&P just flipped green as well. Amazon just flipped green. Coinbase just flipped green. SMCI flipped green. Netflix still down, although Netflix better than where it was 10 minutes ago. MicroStrategy as well, flipping green. The heat map, we'll pull this up right here, showing tech get a little bit of love, but still red in its conglomerate. PayPal is down. No, PayPal's up 61.84. Circle still getting a lot of love right there. We'll get the Circle headline in a second. Then Palantir as well, 184.30 as that one goes green. All of that in the past 22 minutes. This is the Circle Visa stuff. So Visa is now building stablecoin infrastructure with Circle. Visa's announcing that all U.S. card issuers can now settle directly with Visa using USDC. Dollar digital currencies flowing from users to Visa, and soon enough, we will think to merchants, especially those that prefer to settle in digital dollars, more evidence that we are upgrading to new internet financial system. And this is happening on Solana. Visa has another collaboration with Ethereum as well. That was a couple of weeks ago. We talked about that. But Solana is the blockchain of choice for this one, and that's what's helping Circle as well. Stock draft update. So we are leading Matt very slightly. He's at 25.1. I'm at 25.9. Steve's at negative 0.57. Tanner's at 16. Chris is at 5. Still down 60% on Duolingo. We're almost break even on Visa, down 1% there. And then Matt is almost break even on Celsius. He's down on EOG and Bros. But Rocket Lab, SoFi, and ASTS are really leading his portfolio. ABCL, we don't talk about that one that much anymore, but he's up 12% on that as well. So Duolingo, if we can get that one to make a little bit of a pivot, that would help us out as well here. Path, are we breaking out? Path is up 2%. That's close to where it was on earnings. Tesla 476, high of day. It hit 477 for a second. S&P went red again. Wow, that's weird, dude. Nvidia and Tesla both go green along with Google, and the S&P still goes red. JP Morgan selling off. JP Morgan is down. Goldman's down. See, this is why, yeah, look at that. A lot of the leaders that were up yesterday are red today. This is why that whole rotation trade, it's like, if the rotation goes the opposite for whatever reason, because investors are like, well, I like that physical AI via Tesla has way more growth potential than lending at JP Morgan. That rotation from tech can go right back into tech, which is why it's hard to time being long those names. And I think most people objectively would want to be in growthier names going over the next decade in the age of AI over some of the more stable ones. Meta right there at 651. Hoodie really gunning for 120 right here. 119.65 up 3.8%. This thing got to 112 last night. So you just had the entire market get hit yesterday. Tesla right there, 477.50. 477.50. iRobot is getting bankrupt, or it's filing for bankruptcy. The fact that this thing was $4 last week, I know a bunch of you were trading it. I think people made some good money off of it. The fact that it was $4, and I think people knew that this thing was going bankrupt, but it still had all that volume, and now it's just officially filed for bankruptcy and it got hit. So that's why that one is down. Why do you think SoFi is using Solana for its stablecoin and not ETH? Honestly, I have no idea. I haven't looked that deeply into SoFi stablecoin. The one thing about Solana, which is a phenomenal blockchain, SoFi right there is up 3% of the day. And I think people try to make ETH and Solana and Bitcoin compete with each other all the time, but they all have their own different nuances. From my understanding, Solana, and this is a very naive take, but it's the primary blockchain of choice for circle up 9% here for meme coins. Like every single meme coin, including the Trump meme coin, was launched on Solana. But the reason for that is because it's speed and the quickness at which it can handle transactions. And so there's probably other applications of that use case in the traditional financial ecosystem outside of meme coins. And maybe that's also why people like using them more. Yeah, most people say Solana is the fastest. But there's other downsides to it, which is why you get people transitioning to Ethereum. 82.18 on Circle on that Visa news. Palantir 184. Lemonade up 7. Bitcoin and ETH trying to go a bit more green on the day. We got some politician news. Okay, Representative Gil Cisneros. Let me pull this up right here. Has bought $30,000 of Palantir. He sits on the House and Armed Service Committee. Okay. There you go. more and more of these representative stock trades. There is a bill to ban insiders or politicians trading. I don't think that bill has gotten a lot of progress. It was sponsored by a Democrat and a Republican. I think it was AOC and Josh Hawley. I mean, there's not been any major progress on that, but you do see more and more politicians buying stuff. There was one yesterday. Remember that politician that bought the meme coin ski dog mask? That thing's down 96%. So there's not always a lot of alpha in these these disclosures. I still can't believe he bought ski dog mask, but yeah, that one didn't end up working out. Pelosi is retiring though, so we need someone new who can give us the alpha. You know, Pelosi's, I mean, look, all of her plays ended up working this year. She went long Google, that one worked. She went long, what's the other one? NVIDIA from 120, that one worked. She went long Broadcom, that one definitely worked. I think the one that didn't work is Amazon and Visa. Visa's been flat this year. I think she also sold Apple. Now, Apple ended up doing well, but she did save herself from a lot of the downside of it. But a ton of play. Tempest, yeah, that was a massive win. VST, that was a massive win. Tempest, she bought at 25, bro. Tempest was a great play. Palo Alto, I don't know how Palo Alto did okay. I don't know if it was meaningful for her, but it's up on the year. But NVIDIA, Google, again, Google just like exploded. And then Tempest were like the big three this year that she did very well on. Meta is 653. Meta's actually going a bit higher here. Dude, I like that hood's up. I mean, I'm really happy about that. I got rid of a lot of my covered calls. So now every time this thing goes up, it's just pure gains without the offset of the covered calls. But I do wonder how sustainable it can be towards the end of the year. Here's the thing. If we rally towards the end of the year, hood's probably going back to 135. If we actually rally like 7,000 S&P. If we stay flat at these levels, if we can hold 120, I'll be happy. But I mean, you can just easily see this thing getting chopped back down to 105, 107. I mean, it was close last night. So I think with this one, it's really just a question of what happens. Now, the big thing is they have an event today. So that event can meaningfully impact how the market perceives them, especially if they announce some really good products, because they always tend to really outperform on these events because they just show some stuff that the market can't ignore. And so that's going to be important as well. Palantir above 185, SoFi catching a bid. PayPal's up. Wow, Tesla 478, NVIDIA 170. We are really seeing a lot of stocks participate. Broadcom, Google, IONQ's up 7%. Zeta's up 3%. Rivian's up 0.5%. ASTS is up 0.35. Google, are we above 310? Yeah, we were at almost 311. This thing was 303 10 minutes ago. Okay, so you're seeing like a meaningful potential reversal at 10 a.m. Maybe that changes, maybe that doesn't, but we are holding on. By the way, this is Nancy's current portfolio as per the latest filings. Ignore my phone battery that is never charged. But Broadcom's at 15, Google's at 15, SCHO, I don't know what that is. That's at 15. Palo Alto 8, Vista 8, Tempest 8, Amazon 8, CrowdStrike 5, NVIDIA 5, and then Apple at 5, Microsoft at 4, Tesla at 4. So Broadcom's actually our largest holding at 15%. What is SCHO? I feel like I should know this. It's a Schwab thing? Oh, Treasuries. I felt like it was a Schwab thing. Treasuries. Okay, so she has essentially 15% cash and then 15% Broadcom, 15% Google. And then Tempest is 8%, which is like the dark horse. Amazon 8%, that hasn't done much. She also has CrowdStrike, NVIDIA's 5%. But I mean, Broadcom and Google as your top two holdings, this has been a hell of a year. It's been a hell of a year for those. It's VST, not VGT. VST, Vistra, which is a data center play. Meta right there, 652. Tesla, are we at 480? Did we touch it? Oh, we touched it. Wow, dude. If Tesla actually breaks through it, let's do a poll on this. Last year, Tesla was 488 on December 17th. Tomorrow is December 17th. I mean, could Tesla actually repeat 480 or 488. And then could it actually hold it, which would be way more encouraging. But let's see if there's a 479 right there on Tesla. 54% of you say green today over red. Okay, so the question is, does Tesla hit all-time high tomorrow? That'll be kind of wild, right? A year later, it's back at those levels. 550 end of year. Dude, if Tesla sees 550 end of year, I just feel like the whole market is, I don't know if that independently happens for Tesla and not the rest of the market. 550? Oh my goodness. I feel like everything's going to make a gigantic move at that point. Now, if Tesla does that independently, I mean, that'd be great for Tesla. I just don't know if that's necessarily possible. Lulu, that's up a little bit. Tilray, the weed stock's going crazy after Trump's comments from yesterday. Quantum's up a little bit. Carnival Cruise is up, and then MicroStrategy. That's up 3%. Was the jobs report good? The jobs report was not necessarily good, but it was not necessarily bad. So unemployment's up, but November jobs were better than October jobs, or better than the expectations. 64 versus 50. It was not like negative 100,000 to the point where everyone's like, oh crap, like we need to cut rates like tomorrow again. But it also was not so good to justify that we would be running the economy way too hot because we don't need to be cutting rates because there's more than enough jobs. So it was right there in the middle, which is kind of where it needed to be. And that's why I don't think you saw that much of a reaction when the data came out. Robinhood right there at 120, down about 4.3%. Amit, when you say we expect this and that, who are the people setting the goals for that? So from my understanding, the expectations for a lot of the macro data, whether it's PMI or CPI or jobs, are independent groups that are aggregating all the data. A lot of them are think tanks that, quite frankly, work for Wall Street. So Wall Street pays these guys a lot of money for like their projections on what they think the CPI is going to be. And then you have the banks that get involved in this, right? So you have Bank of America, Jefferies, JP Morgan, all of them have their own independent teams that come up with aggregates of this data. A lot of it takes a lot of work because you might have 10, 15 people on one metric just to figure out what's the accuracy of the data. But as you can see, the stock market goes up or down hundreds of billions of dollars based on these pieces of data. So that's why clients pay the banks and the think tanks a lot of money to aggregate that stuff. And then we get to see the expectations from the aggregate. And then, the market ends up using the perception of the expectation against the reality of the data. And today's expectations were not really that much ahead on the up or downside to the broader market. Let's get some more coverage right here on the payrolls. Then we'll keep going from there.
And in the labor market, but it wasn't so simple. There was a lot of confusion in the data. So here's what's going to get the most play, the unemployment rate, because it did tick up to 4.6% in November from 4.4, highest level now since going back to September 2021. You don't want to see the unemployment rate go up. Now, part of the explanation here, though, is not all that bad. The participation rate went up a little bit. So more people entering the labor force drives that rate up, but it doesn't explain the full jump in the unemployment rate. So that's something that definitely the Fed is going to be paying attention to. Now let's show you what we got on jobs. So we got October jobs and we got November jobs. November, more important, 64,000 jobs added in the month of November. That was actually better than expected, but it was mostly coming from like one or two sectors. The negative number that we got in October, down 105,000 jobs, kind of not too surprising because it was the government shutdown and we had those government job losses as well. I think the breakdown of November is important because it does spell weakness overall. Why? 64,000 jobs, which is the whole picture, was in the healthcare and social assistance industries. Construction was a net job adder, professional business services. They all added some jobs. Retail, okay, holiday season. But look at some of the job losers on the month in terms of industries. Transportation and warehousing, that's a trade thing. Leisure and hospitality, down 12K. That may be somewhat surprising given some of the resilience in that sector. Manufacturing, goods producing sector, down 5,000 jobs. So this wasn't a broad-based job gain. It was lumpy. And I think, for those, David, at the Fed who are saying we need to keep cutting rates and get ahead of this, they can point to this job data. I would also just add one more little fact here from it, which is that wage growth is cooling, which makes it easier for the Fed to cut interest rates because we expected average hourly earnings up 0.3, we got 0.1.
Kevin Hasset joined us, of course, potentially future Fed chair, certainly running the Council of Economic Advisors now, talking about a very strong 2026. Sarah?
Yes, well, the outlook is strong. I mean, it's why most
for job growth, too. I mean,
he sees it for job. That's a question mark.
Yeah.
I think.
And again, we heard Hasset. He was relatively bullish, as he, of course, would be for 2026 on the question of jobs data. Hood's still pumping, still making its move. 120 here. Tesla, my goodness. This is higher than yesterday, right? Yesterday, we peaked at 481. Yeah, this is higher than yesterday. We hit 481.95. Let me check resistance at 482. Dude, if we hit 488 today, then we would have hit the high for the high for the year and the all-time high on the same day about a year later. 482 resistance is 5,000 shares. That's not a lot. 5,000 shares is not a lot. Tempest is flat. Robinhood 119.85. Goldman Sachs 892, and then Palantir 186.70. Yeah, the meeting for GoTo is tomorrow. So again, not sure if that's necessarily going to affect Grab in and of itself, but we should get more clarity on what's happening with GoTo based on that meeting tomorrow. And so we're going to have to see. But outside of that, again, the only explanation I can give is that there are certain moments where stocks don't catch up with the reality of their earnings. And right now, I think Grab is severely, severely undervalued compared to the reality of their earnings, but there's not much I can do about it or anyone can do about it other than wait. So I think the GoTo thing is the holdup for why the stock is not moving. Like, that would be my best guess. But that's really my only guess because there's not really anything fundamental to necessarily change that thesis. SoFi right there, 3%. Did Iren just flip? Oh, Iren just flipped. Wow, that's weird. Okay, so Iren now down 4%. Is Nebius following? Nebius is following. And then CoreWeave is also following these data center plays. And then Tesla just lost 480. Dude, choppy. My goodness, this is choppy. You think you're developing a little bit of a trend, and then you chop. And then you freaking chop. This could reverse as easily, but goodness. It's a hell of a chop right there. 478 on Tessie. CoreWeave, Iren, and Nebius, all three of those going red. Such a frustrating market. We can't pick a direction. Yeah. You know, this is very, very similar to last year S&P. Like last year, we barely got a rate cut on December 18th. This time we got a rate cut with enthusiasm. And it's like last year, the market was mad that Jay Powell kind of gave us a hawkish cut. This time the market's not happy that we got a dovish cut. Amcor's down. Yeah, Amcor is likely down because of the Broadcom stuff continuing to hit it. But the thing about Amcor is they had a massive month from 28 to 47. So this one taking a breather is to be expected. But again, there's nothing fundamental that's changed with Amcor. It's just like if the re-onshoring trade is getting a little bit of weakness in the narrative, then boom, you know, the sector leaders are going to get hit. Broadcom goes red, 347 to 339, right back down. Right back down. Amcor insider sold 5,000 shares. Okay, yes, yeah, I don't think the stock is down on a 5,000 share insider sell. But maybe the market doesn't like that he sold 5,000 shares. And the other thing that's going into November is we have a lot of corporate buybacks that are starting, or sorry, end of December. Like in November, because we had earnings, we couldn't do, corporations couldn't buy back their stock. But this is the time where if we get some stupid prices, you might start seeing a lot more of the buybacks being deployed. And so that's another thing that could be a little bit more of a prop for the market. I think we've had $1 trillion of buybacks this year alone, which has been pretty incredible. MicroStrategy at 167. Microsoft goes red again. Google loses 311. It's 5 cents away from going red. Yeah, dude, this market's playing with us. This market is not giving you easy confirmation on up or down. It's giving you the emotions of up or down, but then it ends up just being flat. It ends up literally just being flat. S&P basically flat for the day. If markets flush till the end of the year, it could set up for a big reversal in 2026. Yes, but I also wonder how much sentiment would get hurt. Like if we take a 5% drop towards the end of the year, which I really don't think is going to happen, but let's say it does, there is an obvious argument for a reversal into 2026. But I also wonder how many people would easily be excited about a reversal like that if they're afraid of more pain, unless it's a full-on V shape. We're going to have to see if that happens. Where's fear and greed? Fear and greed is at neutral 50. And this is due to the S&P barely moving, which is probably the right call on this. There you go. Yeah, you're not getting a massive move right there. Okay, a couple of other headlines. Let's take a look at a few of these things. By the way, this was the politician who bought ski dog mask that I was talking about, Mike Collins. His kid had to get access to a account or something. A representative buying ski mask dog, $165,000. That's a lot of money. $165,000. Decent chunk of money, but he was the politician who bought it. This is a video that I thought was pretty interesting as well. Here's DeSantis. You're getting some of the local pushback on the politicians around data centers and why he's thinking there's not that much of an economic benefit.
And a hyperscale data center is using enough power that'd be the equivalent of a city of 500,000 people. And in some of the bigger ones, maybe even more than that. You also have a lot of water consumption. You have a big geographic footprint, which has environmental concerns. So you have all these things. And, our point of view is, you should not have to pay one dime more in utility costs, water, power, any of this stuff because of this. These are some of the most wealthy companies in the history of humanity. They should not be able to offload costs onto people that are already strapped with high costs in other areas. And so, making sure that Floridians are protected against that, I think is really, really important. And I know a lot of people agree with that. The thing.
So you are going to get some pushback from the politicians. We don't know how much it's going to be, given there's so many more people on the political side of the right that are, encouraging the data centers. But nonetheless, you start starting to see a little bit more pushback from the politicians, especially if it affects prices, especially electricity prices for people in their local areas. Here's Ed Yardeni, who recently just downgraded the Mag 7 going into 2026. And here's his take on the labor market as well.
It is funky with a lot of different things going on in that marketplace. But the conclusion is productivity must be extremely strong. And that's good. I mean, that actually helps most consumers because productivity growth is what drives the standard of living. Wages rise faster than prices.
How good can that get next year?
I think it can get very good. This year, I think real GDP is running around 2.5%. Some of that was tariff related in the first quarter was the weakness, and then some of the weakness in the fourth quarter because of the shutdown. But the second and third quarters were very strong. I think next year we'll have 3.5% real growth with a labor force growth of maybe something between 0.5 and 1%. So the productivity number should be at least 2%.
So you're well above consensus on real GDP next year.
Yeah, I think so because I've been rooting for the roaring 2020s and it's worked out quite well so far, and I'm going to stick with it.
But what about the weakness in the labor market?
Well, I think there's a lot of things going on there. I mean, clearly with the restricted immigration, with the deportations on the supply side, and then of course companies, I think, are all looking at artificial intelligence and trying to figure out whether that might be able to increase the productivity of their current workforce.
Do you think that's why that we're not seeing more hiring?
I think that's a big part of it, absolutely. And I think the net result is going to be productivity growth continuing to improve. It has been improving.
So do you imagine a world where the Fed keeps cutting rates next year?
I don't.
You don't?
I don't, because I don't think that lower interest rates are really the solution for what's ailing the labor market. I mean, part of the problem is we've got a lot of kids coming out of colleges with basically the same kind of degrees that just don't really match the skill sets that are required by businesses right now. And so it's going to take a little time to sort that all out, but I don't think lower interest rates do it. The idea of lower interest rates is to stimulate demand, and demand looks pretty strong.
And you saw youth unemployment today. This is kids 16 to 24. That's a new cycle high.
Yeah,
10.6.
I think that's where the problem is. It's very hard for young people to find jobs right now, but nobody's not nobody, but people are not really getting laid off. And so that's the nature of the market, the good news and the bad news.
No layoffs, right, but a lot of not new hiring, in part because we're trying to figure out the power that AI will give us and whether it can actually replace the people we might have otherwise hired.
Yeah, I think, though, a lot of people have been saying this is kind of a no hire, no fire economy, but the reality is when you look at the JOLTS data, we're hiring at a rate of about 5 million a month. It's just that the separations from quits and layoffs are about the same. So it's
all right. So we'll go back to Yardeni, but his argument is the rate cuts are not the biggest issue. But that's a fair perspective if you think the labor market is a deeper issue, or that you just think the labor market has sort of structural problems in regards to AI. But nonetheless, you are still seeing the rate cut potentially have somewhat of a effect to the positive side on the labor market, or at least helping the labor market not necessarily collapse. Tesla just lost a lot of its momentum. Iran just went down 6%. Nebius just went down 5%. CoreWeave getting demolished, down almost 6.2%. Broadcom red, Microsoft red, Google red, S&P just went red again. I don't know how the hell Hood is even holding 3% right here with everything going red. Palantir's holding a little bit of green. Nvidia looks like she's ready to go red. Goodness, bro. It is once again incredibly choppy, and it doesn't look like that chop is slowing down. The Japan stuff you guys are talking about. So, okay, this is correct. The people that are arguing this, Japan will be selling about $500 billion in ETFs. It's about 83 trillion yen. As soon as next month, they are doing this in an effort to rebalance their economy. So yes, those who are saying that, you're accurate. The BOJ is going to slowly sell about 330 billion of that to avoid market shocks, a process expected to stretch over the next 100 years. That 500 billion is not being dumped tomorrow. That's going to take time. So for those arguing the rate hike from Japan, along with Japan rebalancing their economy and selling some ETFs, potentially some US treasuries as well. Yeah, those are definitely things to think about. I don't think you wake up tomorrow and Japan just, nuked $1 trillion of treasuries. That's not going to play out the way some people might be thinking it's going to play out. However, is that more sell pressure? Yes. And I guess Japanese rate hikes on Friday, although I do feel like it's priced in from a perceptual standpoint, still could be a shock to the system. And that could be what the market potentially is afraid about. But it's going to take some time to see if that even plays out. Wow, Tesla goes red. Tesla immediately goes red. Japan is de-risking from the US dollar. Yes and no, because if they still hold the majority of their treasuries, they're still very exposed to the dollar. But yes, in respect to selling US stocks, because that allows them to de-risk from, assets that are pegged to the United States. So that, yes. But I think it's also a question of, do they actually start dumping treasuries? The thing is, Japan can't really start dumping treasuries because Trump's going to give them a phone call and say, hey, stop that. And given Japan is one of our biggest allies, I don't think they would want to piss him off that much. But there might be other ways they have to re-stimulate their own economy. Question is, what are they going to do with all the proceeds from those ETFs that they're selling? And that's where you have a lot of economists saying, well, they're going to even print more money, which is a whole different issue to understand around how Japan navigates it. Oracle holding 1%. That looks like it wants to go down. NVIDIA barely holding 40 cents green on the day. S&P, yes, is red. Broadcom continues red. Grab continues red. CoreWeave, the data center plays. My goodness, dude. Absolutely getting hit. Here's the thing about the data center plays. The overall trend of data center build out has to be consistent next year. And I know all these guys are pretty much sold out and they've licensed as much land as possible. Like every time you hear on the earnings, they've done the only reason CoreWeave missed earnings is not because of them, but because they had a supplier that delayed something, not because they didn't have the capacity. So there's not a demand issue from what I've seen on their earnings, but there is a potential business model concern. And then there's that overall macro concern around, hey, how long will the data center build out take place? Now, if you believe NVIDIA, AMD, and Broadcom, you think the data center build out will be many, many years. If not, then that perception definitely hurts those. But these stocks can reverse as easily as they go down. That's the one thing I've seen about the data. They will flip quick. They will go down quick. Now, granted, I ran at 80. Probably wasn't the best buy. And the problem with some of these names is they created too big of a cult. Like Iren in particular, outside of CoreWeave and Nebius, Iren created way too big of a cult on X. I don't know how this cult got started. There were way too many people that just were in love with this failed Bitcoin miner turned data center play. And it ended up pumping the damn thing up to $80, which I don't know. It was risky at that time. And there wasn't really that much excitement, or there wasn't really that much earnings to support that much excitement. Bloom Energy, that one's down today as well. BE. Wow, down another 6%. Another 6%. Yeah, it absolutely is a failed Bitcoin miner. How do you say it's not? They could not survive as a Bitcoin miner. The stock was at $2. How can anyone argue it's not a failed Bitcoin miner? They might have actually mined the Bitcoin, but in terms of a public company in the public equity markets, all the Bitcoin miners failed. None of them could get their stocks up. And Bitcoin tripled in 2024, and those stocks were flat. I don't think anyone can say that those companies weren't an absolute failure. I mean, just all of them they all had to pivot because they obviously couldn't make any money off Bitcoin mining. It was a successful pivot. It was a good pivot. It's just all those stocks also ran up like crazy. Rock Lab right there, down 4.7. Yeah, they make money mining. I'm not saying they don't make money mining, but not enough to be a public company. There's not enough money in the mining business for them to justify people even caring about buying their stock and holding it long term. Whereas the data center stuff just feels way more realistic that they could actually survive long term. Bitmine right there, that's down 0.65. S&P lows of the day, 676. There you go. Down 0.5% on the S&P. 0.5% on the S&P. How can markets reverse so quickly and completely? You know, there isn't really a headline either that's causing this reversal up or down. I guess this is the whims of the market at this point. We were pushing some heavy green, dude. Tesla was pushing 483 10 minutes ago. It's called a rug pull. Yeah. Cough, cough, algos. I mean, yeah, dude, it's like, there's not another way to explain it. At least on Friday, the one good thing about Friday is we had the freaking Oracle headline. And so that headline was good enough to be like, okay, at least we have a reason to explain why there was so much pain, right? Oracle OpenAI delay, even though the headline was stupid. But yesterday and today, there's been zero reason outside of what I talked about yesterday, which I guess is market exhaustion. Bitcoin right there, 86.9. 86.9 on the day. Amazon, that one continues down. Again, Nebius, Iran, CoreWeave, all of them, they're in the same bucket at the end of the day. And they all are getting hit. CoreWeave getting hit a little bit worse than the others, but still all down. Tesla now 473 as that one is hit. The energy stocks are down, I think, because of the data center stocks. The data center stocks go down, the energy stocks follow with it, which again, like logically it makes sense because if the data centers are down, then all the energy demand is down. But that's not like real because the data center demand is high. Energy overall power output demand should be high. But the perception of a CoreWeave getting hit is that you're not going to need as much nuclear energy. And that's why Oklo gets hit. Even if that doesn't necessarily match up to the reality of their earnings yet. This is not, I don't think this is triple witching week or quad witching. I think that's the last. Oh, no, it is December 19th. That's actually, I'm happy you mentioned that comment. That is actually another explanation. So quad witching is when you have the simultaneous expiration of stock index futures, options on stock index futures, single stock options, and index options at the same time. It happens 4 times a year. So far, it happened March 21st, June 20th, September 19th, and December 19th, which is on Friday. We do have Micron earnings today. Yes, we do have Micron earnings. So, I mean, that could also explain some of the choppiness. Now, granted, I don't think that's the only explanation, but yeah, that's definitely a part of something that we have to deal with. Here's the heat map for the day. As you can see, some of tech holding on to green. A lot of the value names like Walmart that were up yesterday now going red. Same thing with JP Morgan and Lilly. Oh, Micron's tomorrow. Do we have anything today? But a lot of those other tech names are holding on. Oh, no, we have Lennar today. So, okay, Micron's tomorrow. So we'll have Technical Tuesday today, as always. But yeah, Micron is tomorrow. Tessie fighting for green again, back to 475. The weed stocks again are green based on what Trump said yesterday. Tilray up 13%. That's holding on. Nebius jumping from 76 to 78. That means Iran should be at least getting a little bit of a bounce. Iran 33 to 34.50. I don't know if it's a V shape yet. We see the slightest of a little V. And we're like, oh, V shape. I don't know if we're easily getting our V. Palo Alto Networks, yeah, 186. That's 0.42. SoFi hit 2650 today. Now down to 2614. NVIDIA holding is a good sign. Yeah, I agree. At least the good thing about NVIDIA is like it's not tanking, right? So I know it's down from 200 at 176, but you know, NVIDIA did do this in 2024. It held a level for about 9 months before it finally broke out. I don't know if we have to go 9 months given the earnings inflection, but it's better than this thing tanking down to the 140s, 150s again. Again, I also think it just gets way too cheap if it gets to those levels, and the market knows that, so they're not going to let it go to where it needs to go, around 190, but they're also not letting it get that cheap. Amcor is down because of Broadcom. Amcor is down because of Broadcom. Which, again, the correlation there should not be that stock related, but Amcor was also up a lot because of Broadcom. So both of those tend to trade together. Same thing with Google. There shouldn't be a correlation with Google and Broadcom that explicitly, but there is. Google right there at 308 is that one's red. Ken Griffin is talking about AI right now. Was he on Bloomberg? Okay, let's head over to him. Let's see what he's saying right now.
You are most welcome. And to everyone, it is such a pleasure to be here in Europe at this time of year. Enjoy the holiday, how the world values what you're doing, and that investors are able to use as a metric or milestone in measuring their own skills as an investor. You know, one of my concerns with private credit, for example, the vast majority of companies will never default. You invest your money today in a company's credit, you won't know for 5 or 7 years if you made a good investment, which means that a substantial portion of your career will have slipped through your fingers before you learn whether or not you made a good underwriting decision. And as we go back to the start of the story, one of the distinguishing factors of the American success story is the depth and efficiency of our capital markets.
Okay, so we'll try to get some more quotes from him, but it looks like private credit is something he called out, and probably the AI narrative he called out a bit. Oracle right there, getting a move. You're getting some Oracle option flow coming in aggressively. That's why Oracle might be moving. Let's pull this up. Oracle is, wow, you're getting some decent premium there. About $2-3 million of premium for end of year calls on Oracle at around $200. So the option flow coming in heavy on Oracle. NVIDIA 176. Broadcom just flipped green. 197.50 for Oracle expiring this week. $1 million call buyer. Bought some options. Nebius right there, 78.41. Amazon at 222. Microsoft 473. Tesla once again goes red. Hoodie holding on to 118, and then Meta at 650. Mid, do you think all these data center plays are tanking because of Oracle's bad earnings call? Well, I definitely think Oracle's earnings call didn't help the data center plays. I realistically think the market is exhausted of data centers as a concept, which sucks because, you know, the industry is growing. There's massive potential. There's all this growth, yada, yada. But a lot of those stocks have still done one. I mean, even Nebius still up, what, 130% for the year. Iren's still up like 300% for the year. So a lot of these names, they're not up the crazy levels they were up before, but you also necessarily can't get too upset. Iren's up 225% year to date. And then Nebius is up 156%. Now, granted, everything Oracle said about data centers was bullish. I think they said the call was kind of bad in terms of like how they answer some of their AI questions. But in terms of data centers, the only thing that you can get that was bearish was that they didn't give a definitive answer for the OpenAI question, which is okay. But, you know, Nebius and Iren are not really dealing with OpenAI. So their clients should be good for the money. Now, CoreWeave does have a lot more money that's associated with OpenAI. So I can understand why that one uniquely got screwed after Oracle's call, because the street got more worried about OpenAI. But there shouldn't be an immediate correlation to all the data center plays outside of the fact that they're all trading the same way that Oracle trades. Doug says, did you talk investing generation got bored of a theme and now the algorithms will no longer recommend it? Yes, that's also dude, that's another thing. People could just get bored of a theme. That's also fair. Take a look at this chart right here. This is why OpenAI is criticized so heavily in the $1.4 trillion of spending they committed. They buy cloud computing from Oracle. They buy cloud computing from Microsoft. They buy chips from AMD. They buy custom chips from Broadcom. They buy chips from NVIDIA. They buy cloud computing. They invested $350 million in CoreWeave. Then you have Amazon they buy cloud computing from. Like, they are at the center of a lot of these hyperscalers that are paying what they're paying. So this is why, as much as I don't necessarily love Sam Altman, yeah, OpenAI needs to win because they are definitely part of this ecosystem. Oh, that's a headline. Speaker Johnson says the GOP healthcare bill will be voted on tomorrow. Is Oscar getting a move right there? S&P trying to recover a little bit. Oscar still down 2%. UNH also down 1.3. Okay, so then if the subsidies are voted to be extended tomorrow and they actually get the vote, maybe that avoids the shutdown, which, again, the healthcare market or the healthcare issue was the reason for the January 31st renegotiation as well. 37% is what Kalshi is saying for the shutdown. Still a significant probability to do that. That could be a dark horse issue for the market in January, which would be super annoying, but nonetheless very, very possible. 37% chance going into the end of the year. Sezzle, so that's a fintech. That one's made a move. I think they had a couple of headlines that's helped them. This one's a $2.4 billion company. Wow, 9% on the day. This one's had a pretty good week as well. Sezzle stock, year to date, it's up 59%. Past 5 days, it's up, well, past month, it's up 42%. I think Neil likes this one, if I'm not wrong. Maybe I'm getting it wrong, but I think Neil does like this one. What do you think about Oracle? I just think it's hard. Look, I don't think these guys should go below 180. 350 was also kind of stupid. The problem with Oracle is, again, I would want to be a buyer, but when I listened to that call and I heard them talk about the financing and how they didn't have an answer for how much they're going to finance, that's what got me confused. Because the only quote we got was it's going to be significantly less than what's been reported in the media. But if the media is reporting 200 billion and you guys are doing 100 billion, like that's still a lot of financing. And Citi is analyzing or estimating it's going to be 20 billion per year that they have to put out in debt, which is not a horrible thing if they can make a return on it. But then you have to believe their RPO. And it comes down to, do you believe Sam Altman is going to give Larry Ellison $300 billion? I mean, it's just hard to easily say, yeah, I definitely think that's going to happen. Which is why Oracle becomes confusing. NVIDIA is still red on the day as well. Wow, Michael Burry. Ryan Cohen possibly had the temperament to be the next Buffett. I liked Ryan a lot. Ryan seemed young. I believed he had the temperament to be the next Buffett. Look, I like Ryan Cohen too. I don't own GameStop, but I am a fan of Ryan Cohen. I've seen his interviews. I like his sort of long-term mentality on stuff, but the next Buffett? Really? That's a hell of an endorsement. The next Buffett. Okay. All right. Is Burry crashing out? I don't know, dude. Some of these quotes are weird. Either he's trying to really sell newsletter subscriptions, which the guy should be filthy rich. I don't know why. I don't think he's doing it for the money. I think he's doing it because he loves like creating. At least that's what I'm getting the feel from. But he's doing the thing that like a YouTuber does as soon as they start their channel, which is clickbait. And he's not clickbaiting effectively. He's saying some outlandish shit, which I guess is clickbaiting effectively. But yeah, it is a bit weird. Let's hear from JP Morgan and get some of their thoughts as well on where this market could be going.
Year-over-year wage growth in 4 years. And one of the things we have very slow job growth, but I thought that the lack of labor supply might have held the unemployment rate down, held wages up. But it's even that's getting a little weaker. So it's a pretty grinchy report, to be honest.
All right. So what does it portend?
Well, I don't think it actually portends that much. I used to call this economy a healthy tortoise. I think it's a little bit more of a sickly tortoise right now, but it is still moving forward. I think we'll avoid a recession. It'll be weak fourth quarter because early next year, we're going to get all these income tax refunds. I mean, this year, the average income tax refund was $3,200. Next year, we think it's going to be about $4,000. And that's all going to come in, late first quarter, early second quarter. And I think that helps push up consumer spending. So, I think the economy will rev up in the first half of next year and then maybe fade again unless we have some further stimulus.
All right, so yeah, GDP growth picks up in part because of consumer spending back by an additional $800 or so over the year previous. Why does the second half then get weaker?
Well, because first you've got this level of consumer spending that you're now not going to be able to sustain because this is sugar, it's not protein. People spend it, it's gone, and so it'll be hard to maintain that pace of spending in the second half. And then also we don't have much labor supply. I mean, it's I think the native-born population, working age population, is shrinking. So without, if we've got almost zero net immigration, it's going to be really hard for this economy to grow by more than 1.5% at a trend rate. So we think, maybe 3% first half, 1% second half, and maybe if we avoid recession, 1.5% next year. But it's certainly no boom.
When you say avoid recession, I mean, the GDP growth looks actually quite good and quite strong, thanks to a lot of the investment that's happening around AI, the increased business investment. I mean, even as I mentioned, the retail sales numbers today were good as far as the control group that feeds into GDP. So that's not, it's really a labor market recession, not a recession.
Well, the GDP numbers will look better than the employment numbers, but I think even in the fourth quarter, GDP growth may be only in the order of 1%. So it's not exactly booming. I think it will be about 3% or 2.5 to 3% for the second quarter.
Third quarter.
For the third quarter. So I think it is slowing down, but even in investment spending, yes, there's a huge data center boom. But if you look at things like heavy truck sales, they're really weak. If you look at construction spending, home building, it's not strong. So we are seeing, I think there's so much focus on these data centers that we're kind of missing the point that a lot of other investment spending really isn't that powerful right now. And also in the energy patch, because we've got low oil prices, we're not seeing a lot of drilling.
So you're making a case that maybe the Fed should be cutting rates more than once, which is what's in their forecasts right now.
No, I wouldn't. No, because I don't think that would stimulate the economy. We've got some supply side issues.
Yeah, but they think it would.
Well, yeah, well, they do that, but they also think about the other side of the mandate. And, we'll have to see, when consumer spending picks up in the first half of the year, that my great fear is that that's when retailers are going to say, now's our opportunity to pass on these tariff increases. Because right now we have not seen as much inflation out of the tariffs as we thought we might.
So you do think that could hit in the second half of next year?
No, I think it'll hit later in the first half of next year. And then so long as we don't have a further, set of stimulus checks, I think both the inflation rate and growth will just slow down in the second half of next year. So by the end of next year, we're going to be back to sort of a fairly normal economy, but I think it'll heat up a little bit in the first half.
And what about productivity increases as a result of use of AI in the enterprise?
I think it'll be a long time before we really know what that is, because right now what I think is happening is businesses are saying, okay, we're not going to replace the people who just left. So you had 11 employees, now you got 8. But hey, we gave you AI. And so a lot of the employees are saying, we're just working harder. And the business is saying, you're using AI to be more productive. And I think it'll be a while before we can figure out. Eventually, AI will increase productivity. I'm just not sure that's really happening right now.
David, got to leave it there. Always appreciate it. Thank you.
Anytime.
David Kelly.
We are a little...
All right, David Kelly, that is his thesis on the market. He's a bit more bearish. Bank of America, again, was a bit more bearish as well yesterday. They're expecting 71 hundo for the S&P. Nebius continues to go down 3%. Oklo down 2. Amazon 223. Tesla flips green again. This one has had like 7 green-red flips on the day. SoFi still green. Goldman Sachs, JP Morgan down, and then Palantir once again holding on to some green. Choppy. And as I'm scrolling through more of these headlines, there's the new updated heat map. Again, a lot of it just feels like the market's not exactly sure how to react towards the labor market data. This is Besant. Let's pull over to him. Let's see what he had to say this morning. This is on food costs.
This new stress that we're talking about that keeps showing up in all the polls, that people are stressed about housing, stressed about the cost of food. What is the administration's plan to rein in the cost of food and housing?
Well, Maria, people should be stressed because this Biden inflation, as I said, it was worst inflation in 50 years. And Strategas, the brokerage firm who you know well, had something. Jason Trenner had something called the Common Man Index, which was working Americans. So the accumulated CPI during the Biden years, called it 22%. For working Americans, it was 35. And that 35 was just a wipeout because it was groceries, insurance, rent, and the auto. And we are bringing that down. So in energy, which leads everything, is coming down. Energy goes into grocery prices. So affordability has 2 components. So just like with the deficit, with the deficit, there are 2 parts to it. There's constraining spending and then upping revenues, which is what we're doing, which is why we had this several $100 billion contraction. With affordability, I suspect that we are going to see a substantial drop in inflation the first 6 months of next year. Rents are down. The story that the Biden administration doesn't want to talk about, the mass unfettered immigration, they have pushed up rents. Especially for working Americans. There's a recent study out from Wharton School that shows every 1% increase in population, rents went up 1%.
Wow.
So President Trump, by enforcing the border, sending home more than 2 million illegals, we're now seeing D and C rents coming down substantially.
I don't know if the American public is going to be okay with them continuing to blame Biden. I think you can do it for maybe another couple months, but once you get into that 1.5 years of the new administration, I mean, people are going to be looking for more answers than it's Biden's fault. Robin right there at 118.95. So I don't know. We got to see how effective that strategy is of Biden allowed immigration. Yeah. You can agree with the argument. The argument may be correct. The question is how effective it is from a political perspective of using that argument to get people on your side. Johnson says there will not be a vote on ACA subsidies tomorrow. Cannot reach an agreement on those subsidies. Johnson says GOP healthcare bill will be voted on tomorrow. Wow. So they're not actually doing the vote on the thing that matters. Oscar is still down. Dude, what matters is the subsidies. I mean, like that's going to be affecting millions of people. The fact that they're not voting on that, but they're voting on everything else, tells you that there's still zero level of agreement between the Democrats and Republicans on subsidies. And unfortunately, what it continues to signal is that this shutdown, if the subsidies once again are the linchpin of why Democrats and Republicans can't keep the government open, it means the probability of that continues to be relatively strong going into the end of January. That is not fun to see. Mitt, are you on ACA? If not, what kind of plan? I'm just on a regular private UNH plan. So I was under my parents' insurance until I was 26 because that's what the ACA allowed. So then 2 years ago, I just bought my own insurance. But regardless, those subsidies are really, really going to have a big impact, right? And I think it's something like 25 million people are affected by that. And that's why the Democrats are fighting so hard for it. Now the Republicans are like, well, it's illegal immigrants that are getting the subsidy. So it's like, it's that back and forth that's not necessarily going to be resolved anytime soon. Do you have beard insurance? I should have beard insurance. Siege, thank you for the $20 super chat. Burry missed that Amit's already the next Buffett. I am not the next Buffett. I am nowhere near close to being the next Buffett. I don't think I ever will be. But I don't know if Ryan Cohen is either. It's a hell of a thing to say Ryan Cohen is the next Buffett. I mean, the only way that could logically make sense is if GameStop ends up becoming a good investment, because I don't think Warren Buffett would ever touch GameStop out of all things. And forget GameStop, the company. Just look at the fundamentals of GameStop. Like, I don't know if Buffett would pile into that. Now, Buffett's had his losers. Kraft Heinz wasn't the biggest win, but the first few investments Buffett made ended up working out. So GameStop's got to really work for that to be effective. And the question is, does it work? Mind you, they bought like 5,000 Bitcoin. I don't think Buffett would buy 5,000 Bitcoin either. So it is quite the comparison to make. NVIDIA right there, still red, 176 on the day. Yes, the ACA, for those that are international, is Health Insurance Affordable Care Act. S&P down 0.5%. And it's something that, as a country, we've never been able to agree on, to be honest. There was a chance to repeal the ACA back in 2017, and John McCain was the deciding vote on repealing, essentially, Obamacare, the ACA. And Trump ran in 2017 on the idea that they would repeal it. The concept was called repeal and replace. And John McCain voted no. He voted no. For those that have never seen this, this is what it looked like.
short when the Maverick made his mark. Senator John McCain, just days removed from his cancer diagnosis, stunning the chamber, turning the thumbs down on the repeal bill. It happened just feet away from Republican leader Mitch McConnell, prompting an audible gasp in the chamber.
I remember seeing that live. I was in Texas. I was at a debate tournament. And I remember I was in a hotel room and that was on the TV. And I was like, wow. The Republicans were really running on that heavy. Trump was pissed off. The next day, he was not happy about that. 51-49. And I think the reason he voted against it is because he didn't have a common understanding of what they would replace it with, which would theoretically have led to a lot of people not having healthcare. So, that's why he voted in that direction. Path right there is 1631. Pouncer goes green. Hoodie, I think this event is what's keeping it afloat tonight. If they introduce some really good stuff, that's what could get the market excited. Robin right there, 119.33. As that's up 3.5%. Hood's up because of crypto. Yeah, that's actually true. I forgot. Bitcoin making a move right there, 87,850. When is the next NYC meetup? Let me put the link in the chat. All the details should be there. But it will be February 1st. And you can read all the details in that link right there. We already got the job report for those that were asking. It was 64,000 versus 50,000 expected. Unemployment rate at 4.4%. The market, I don't think, is necessarily reacting to that jobs report. That's not why we're red. At least that's not what I think we're red for. I think we're red once again because this AI trade is getting exhausted. And maybe end of year market wants to have a Grinch rally over a Santa rally. Then again, as I say that, I feel like it could flip instantly. The good thing about the multiples we're trading at least on some of these stocks, is that they're not crazy aggressive like NVIDIA. So for them to flip quickly is not wild to imagine. But right now, there's definitely, one could argue, at least some concern with the overall trade. Let's get a little bit more coverage on that jobs report as well here.
The critical issue of inflation and the cost of living falling to a new low in the CNBC All-America Economic Survey, with the president actually losing support, not just from the broader American public, but also from some of his own key constituencies in his base. The survey of 1,000 people nationwide finding that approval of the president's handling on inflation has dropped from 37% in April to 31% now. Disapproval rising to 66% from 60%. So the result is the net approval now -35, up from -23 in April, including a further 8-point decline in just the last quarter. Big changes among Trump supporters on inflation include Republicans going from +58 to a net +32. Blue-collar workers from being split on the issue to now -30. And in rural counties, all adults are saying they were +13. Now they're -14. For the first time since April, a majority of Republicans also rate the economy as fair or poor. That's not quite as bad as Democrats and independents rate the economy, but it is over the majority standpoint at 50.
Now, there's two things to this. Number one, a lot of these polls, again, the sample size, the way they do the polling, all that stuff, it starts bringing up a lot of questions, right? Which is why people are liking the prediction markets, because, if you had a prediction market on, hey, is the Republican affordability message working? And it was 30% yes, 70% no, you have real money that's going behind that argument. And that's what makes it potentially more believable. But number two is, I think those poll numbers, which the Trump administration still looks at, are part of the reason for why they keep pushing the affordability narrative. Whether it's Basent or Hasset or Trump or JD Vance, every time they do any public interview, they try to either blame the Biden administration for the lack of affordability, or they try to show how they've got gas prices to go down below $3 nationally, which is, I believe, correct, it's like $2.99 or something. And so that narrative continues to come up, and it tries to justify why the administration has done a good job already. But the midterms will be the real decider of that. Take a look at a couple of these charts as well. Goldman Sachs did some analysis on AI bubble and Google mentions of AI bubble, and it peaked in around September and it's come down since then. So although the market may be still thinking, hey, there's a ton of AI bubble concerns, the level of search results on the concept of an AI bubble have not really been that high relative to what the market's thinking. So could be more so perception versus reality there. Also, the Venezuela stuff continues to become a broader issue, which again, I keep saying I need to look into it. Every week, there's just so much macroeconomic stuff that I don't look at the geopolitics of this, but you do have some stuff right here. There's an old senator classified briefing from Hasset Rubio, and 50 senators, Democrats and Republicans off the Armed Service Committee are there. Over 2/3 of the senators have filed into the briefing of the Trump admin's operations in the Caribbean and Pacific. All-house classified briefing to follow in an hour. So you're getting a lot of more attention. Trump did classify fentanyl yesterday as a weapon of mass destruction. As you can tell how much the administration is taking a stance against illegal drugs. And now Venezuela may be less about drugs and more about oil, but you are seeing the administration. I mean, this is the first geopolitical thing outside of Russia, Ukraine, and Israel, Hamas that is actually getting the administration's attention at scale. Bitcoin right there, just below 88,000. Should I sell NVIDIA? All right. What do we think in the chat? We'll have the chat answer it. Do you sell NVIDIA? Look, I think the answer is no on a multiple basis. But do you trim because you need to have some cash on the sidelines? That becomes a personal decision, right? That always becomes a personal decision. Same thing with Hood or Palantir or Tesla or any of these stocks, right? I think if the question is, do you sell, aka do you eliminate the position? I have my thoughts on that, and my thought on NVIDIA would be no, not at this multiple. But do you trim and take some off the table just so you have some cash on the sidelines and you feel a little bit more comfortable? I mean, that comes down to how you feel. And honestly, no one can blame you up or down for that. And what are you selling for is the key question. Yes, that is also a question. What are you selling for? A, what are you selling for? B, what is your short-term outlook? Because look, if you think NVIDIA is falling to 150 because we're going to get some massive drawdown soon, then, I mean, yeah, obviously selling right now makes a little bit of sense, or at least taking some off the table. But it also warrants the question why you think we would get that type of pain. Here's the thing, Tom Lee's talking about this 20% drawdown. If that 20% drawdown happens in the first 6 months of the year, everyone will have wished they took some profits in January. Because, to be able to buy that dip, unless you're tapping margin, you need some cash, right? If we don't get that drawdown, everyone's going to be annoyed with themselves that they sold in early January, because if the market runs up and maybe that 20% drawdown, which maybe happens, maybe doesn't happen towards the end of the year, then just missed out on a bunch of gains. Obviously, it's hard to time it. So a lot of it comes down to your own personal perspective. And then also, do you have to pay certain bills where you can't afford to have so much money in the market and you just need to have some? I mean, a lot of that comes down to your own personal perspective on this. Robinhood still pushing 120 right here. Also, yes, taxes. I mean, that's a big deal. I mean, you might have a lot of people selling in January just to have some of that money on the side to pay for tax. The worst thing that happened last year, I remember, was because I had to sell some stock for taxes, was that April was Liberation Day, and then April 15th was tax day, at least in the United States. So a lot of us had to take profits to pay our taxes. We had to take profits into massive weakness, which sucked because then we V-shaped immediately. So you might have some people that just say, screw it, I'm going to take some profits now to pay for the taxes versus risk it again. Why sell anything? Aren't we long-term investors here? Okay, I disagree with the premise. You can be a long-term investor and still take profits. That argument does not make a lot of sense to me. You're allowed to be long on something have a massive gain on it, or just say, hey, I'm not feeling comfortable right now. I want to take a little bit off the table. It doesn't mean get out of the entire market and take some profits. So you can't be ideologically trapped in the idea that because you're long, you never sell. Now, if that's how you want to do it, that's totally fine. And quite frankly, that's probably the best way to do it because most outperformance comes from just holding on. But I don't think they're inconsistent with each other. Like if you're up heavy on Google this year and you bought at 150, does being a quote unquote long-term investor means you can't take some profits at 307? No, that's ridiculous. That's insane. Of course you're allowed to take some profits here. You deserve to take some profits here. The question is just what do you want to do with the money? And that's an individual decision, but that doesn't mean you're not long-term. Lunar, oh, by the way, what's that company that Mark Rober did a video on? Luminar? Yeah. These guys are not having the best day. I believe they are also filing for bankruptcy, if I'm not wrong. Yeah. Lazar filed Chapter 11 yesterday. Luminar Technologies. This is the company that was pitching that whole LiDAR thing against FSD, and they paid the YouTuber to make a ton of videos about them. And then the guy kind of did a sus video. Like it was just very weird how he framed the video. Yeah, they're bankrupt, which once again proves that really this is Tesla and Google's game to win. I sold some stocks to buy a house. Yeah, see, I mean, everyone has different perspectives on taking their profits and putting into different places. Didn't their CEO dilute everyone and bought a mansion? Yes, their CEO was not necessarily the the best steward of capital. I sold a house to buy Tesla. That's hilarious. I think one of you guys said you haven't bought a house. This was a couple of streams ago. You haven't bought a house because you've been long Tesla since like 2019, but you have like 5,000 or 6,000 shares, but like the thing is 20x on you. So you're just like, that's why you haven't had a house, which is fair. I mean, that's a different type of American dream. Apple plans to expand its iPhone lineup to 7 models by fall of 2027 from 5, as per the information. Okay, so obviously those 7 models would probably be rooted in the foldable phones, which I'm not going to go down that rabbit hole because I already voiced my opinions. I don't think the foldable phones are a thing. Maybe they become a thing. I don't believe in the foldable phone concept. But that's the only reason they could have 7 models. Otherwise, how else do you get that many models? Like, does anyone really think foldable phones are like, I don't know, dude. I really think Apple needs to be focusing on how to make the current iPhone an AI supercomputer, not introduce more hardware that no one cares about. By the way, the iPhone 17 was amazing. It was a major upgrade. But for them to have a major upgrade like that every year, I just feel like is very, very hard. It's going to be the same as the Vision Pro. I think foldable phones will do better than the Vision Pro. The Vision Pro was absolutely garbage. In fact, when I was at the App Store a month ago, I asked them, like, does anyone buy the Vision Pro? And the employee just started smiling. It was one of those smiles. It was just like, oh, we don't talk about that here. It's like, really? You don't talk about the biggest product launch you had in 2 years, Like, they obviously didn't want to admit that no one cares about that thing anymore. Is it a good idea to short Carvana? I wouldn't, given everyone that's tried has been burned, including Jim Chanos. No, they just got to add into the S&P. It would be hard for me to easily say this is a short. Why aren't you going to the Hood event tonight? To be honest, I didn't want to travel, dude. I'm like happy staying at home. And I can stream it now, which is more fun. But it's in California, bro. I didn't want to go all the way to California just to like see the event. As much as I would love to be there in person, I'm also tired, bro. It's the end of the year. And I'm sure there's going to be plenty of traveling next year. So But I do have an interview coming out with a Robinhood executive tomorrow. It'll be posted tomorrow after the event. So I think you guys will enjoy it. It should be a fun one. But yeah, Cali is a little far. Would you miss a Palantir event to stay home? Well, I don't have to answer that because Palantir had an event in New York City last week. And so, no. But New York City was way closer than Cali. So it was very easy to attend that event. That was a fun one too, dude. You got to meet a lot of people. The NVIDIA people were awesome. Like I got to meet a bunch of their like PR people and like their communications guys, and they're so cool. So that was fun to see them. iHeartMedia and Netflix have announced an exclusive partnership for video podcasts, which includes over 15 iHeart podcasts and includes all new episodes as well as selected older episodes. Okay, I feel like this was going to be inevitable that Netflix was going to sign a podcast deal with somebody. They're picking iHeartMedia. What are the biggest podcasts under iHeartMedia? Is there a big podcast under iHeartMedia? Well, yeah. Megyn Kelly is under iHeartMedia. Mel Robbins and Jay Shetty are on. Dan Patrick, Breakfast Club, Steve Harvey. Oh, wow. They got a lot of hits, bro. Does that mean Megyn Kelly's going to be on Netflix now? That's a pretty big deal if it includes those larger podcasts. I think Ryan Seacrest is part of it as well. I mean, first of all, it's just more, it's very similar to the argument I made yesterday. Yesterday, I said, what if Netflix allows you to upload user-generated content? And obviously, that's not the route Netflix would go. But what are they doing with iHeart? They're buying user-generated content, essentially, just exclusively. So they're getting to curate it, but they're admitting that they need more content, that they need the Megyn Kelly or the Jay Shettys of the world. So, I mean, again, my overall bearish thesis on Netflix for the past couple of years has been, I don't see why this company is better than a YouTube, and I don't like the business model of paying for content. I was wrong on the fact that the premium content, there is a big market for that I didn't estimate as well. But for this thing to double over the next 5 years, you're going to have to grow that premium base heavily, which means you're just going to have to invest a lot more, which is why they're trying to buy Warner Brothers. So, definitely got the thesis wrong in 2022 because I didn't think people actually cared that much about Squid Game or Stranger Things. They do, which is why Netflix has a lot of subscribers. But to keep them there, you've got to have fresh content every day. I mean, the beauty of YouTube is that the algorithm is so good, and you've got 5,000 engineers that are making that algorithm better every single day, that a piece of content that you didn't even know you'd be interested in will pop up on your feed, and you'll click it, and then you'll actually potentially start consuming things you've never seen before. I'm sure that's how a lot of people found me. And I find a new creator every week. And I actually start watching some of this stuff. That type of content machine is very hard to replicate, but it's incredibly powerful when you're able to do that. S&P still down 0.4, 678. Apple's iPhone roadmap from foldable screens to curved glass cases for those new iPhone models. Netflix does have good content. You are just not a movie watcher. Okay, that is fair. Well, my point is, if you care about what's happening today and you want Megyn Kelly's perspective on it, it'll be on YouTube waiting for you. Netflix doesn't have the ability to just put that in your face because they don't have the content. That is the difference. I didn't finish the Diddy doc on it. I watched the first 20 minutes of the first episode. It's very interesting. I just ended up not finishing it, but yeah, I do want to finish that. They had a lot of exclusive footage in that documentary. I can't believe they got that much footage, but yeah, that documentary seems to be getting a lot more people at least curious about what happened with Diddy. All right. What else? What else? What else do we have? Netflix should buy YouTube. That would be a little tough. The BM&R CFO did resign today. In the 8K they released, it was not due to like differences in the company or something. The CFO just had something they wanted to move on to do. So that's the extent of the information I have on the BM&R CFO leaving. But it doesn't seem like there's more to it. I will try to get some different info. But they did resign. Separation agreement said no disagreements with the company. That was the specifics of the wording. Yeah, hood events at 9 p.m. 9 p.m. So after the market closed, but late at night. NVIDIA goes red again. UNH goes red again. Broadcom goes red again. Nebius continues red. Tesla barely holding on. Grab is red. ASTS is red. Hood is a little green. Meta's green. SoFi is green. S&P. Wow, this is the low of the day, folks. It literally just hit the low of the day and then got a little 10-cent bounce. But we are right in the thick of it in terms of the lows right here. Ahmed, have you watched There Will Be Blood? I have not watched that yet. Didn't Steve say it sucks, though? Steve said it's not that good of a movie. I got to trust Steve, bro. He's my movie guy. He's my movie guy. Well, no, I do need to watch it. Okay, let's see if we have any other headlines. If not, then we'll move on, or we'll be done for today. Ken Griffin probably said some stuff that's making the market think. That's why you had a little bit of red there. We looked at non-farm payrolls. You got Goldman Sachs. Let's get their perspective, I guess, on what they're thinking of non-farm payrolls as well.
Articulated, but also you're going to get a fiscal boost from the big beautiful bill. You're obviously all of the AI infra spend that's going to take place in 2026. You know, by some estimates, close to $500 billion, and of course dereg. And so when I look at those four things, that leads me to be very optimistic for 2026.
Yeah, others kind of call it the holy trinity of monetary, fiscal, and deregulatory tailwinds. That you have no problem with that.
And a secular technology, which is coming online, right? So I'd say four things, yeah.
The AI build out,
of course,
which you have said in the past, whenever a new technology comes along, kind of accrues better to capital than to labor at the beginning.
Sure. I mean, I'd say, of course, you know, because of the productivity gains, you know, you'll see things accrue to capital, but I think all of society will end up benefiting from it because society benefits anytime you end up getting a productivity boon.
Then what about wild cards or soft spots that you were trying to suss out for the next 12 months at least?
Well, I think it's if any of these things don't come to fruition. So, for example, what if you end up getting, you know, an exogenous shock which causes inflation? What if you end up getting, you know, obviously things between the U.S. and China have been on a very good, you know, kind of course correction. What if that were to become derailed? So those are always things that are sort of in the forecast, but you could end up getting something that deviates from the forecast and that changes your outlook.
Is the market going to broaden? They had a long discussion just now at the desk about the way Mag 7 has carried so much water all year.
I think you're starting to see, obviously, the onset of that. I think the market will broaden because one of the things is, of course, the hyperscalers are going to benefit from being sort of the suppliers and the manufacturers of this AI technology. But then there are a bunch of companies that are going to use it and become a lot more productive and profitable as a consequence of that. And so I think you're seeing that start to make its way into the market.
Really? So we've moved from picks and shovels now to we'll be watching adoption rates, essentially, is what you're saying.
Yeah, but again, remember, the stock market is like the PV of what's going to happen, not next year, but over the course of maybe the next 3 to 5 years. And so that can start to make its way into the market sooner than we will actually see realized adoption.
Right. Can all of this happen if labor is softening and if we have these ongoing discussions about a K-shaped economy, which you've pointed out before is not necessarily a new phenomenon?
Yeah, I think we've always, you know, had certain segments of the economy that have struggled. I think one of the things that's very healthy that we've seen in, certainly in the recent jobs data, is that the participation rate, which had been very, low, is starting to come back up, and that's actually a really good thing when you start to get, if the unemployment rate is going up because you're getting supply side starting to come back, that's a lot better than if it's happening because you're seeing job losses.
Right. So once again, Goldman is bullish. Like, their risks to the market are if something exogenous happens, which would be like a spike in inflation or a massive decline in the labor market, but they're not necessarily giving you a bearish outlook for the year. I mean, pretty much every bank outside of Bank of America, Oppenheimer, JP Morgan, Goldman Sachs, all these guys, Tom Lee, Fundstrat, they're all arguing for another 10% year, which, would be different from the past 3 years, but still 4 years in to a bull market would not be crazy to see a 10% move. So it doesn't feel like they're necessarily too bearish going into next year. And again, that Fed easing argument, AI trade still continues to be their argument. Netflix right there, 94, a little bit of green. And then the S&P 677, that's down 0.45%. All right, guys, I think that's it for me. We'll have Technical Tuesday later throughout the day on the market close. We'll have the big hood event at 9 p.m. Excited for that. I have no idea what they're going to announce outside of the fact that it'll probably be rooted in prediction markets and AI. But if we get, this is their 4th event of the year, so if we get some really strong products, that could potentially be very, very good for just the overall narrative going into the end of the year. But that event will be important. And yeah, I'll probably be live at like 8:50, so 10 minutes before. And then we will start streaming it. All right, word of the day. I think we should do a new prompt for word of the day. We've been doing finance words for like 2 weeks now. So what should the word of the day be? Or what should the prompt be? Give me a word of the day that, and use it in a sentence that is, I don't know, inspiring or something. Intellect. We did the intellectual ones. Words with double meanings: positive, uplifting. Okay, that is positive, uplifting, motivational, and inspiring. Let's see. This is so freaking cheesy. Is what we need, though. Fortitude. With fortitude, you can face uncertainty head on, knowing that every challenge you endure is quietly shaping you into a stronger, more confident version of yourself. This is so cheesy. Okay, we might have to alter the prompt later, but there you go. Word of the day is fortitude. All in Fortinet. Yes, exactly. With fortitude, you can wait. It didn't even give the definition. Give the definition of it too. Fortitude is a strength of mind and character that enables a person to face difficulty, adversity, or pain with courage, resilience, and calm determination. This is a 4th grade word of the day. All right, I'll adjust the prompt later and we'll make it more intellectual or harder to use. Harder. Well, we need hard words to say. That's how we know it's a crazy word. All right, cool. That's it. I'll be live for the close. We'll be Jason. We'll get his thoughts on TA, where he's thinking some of these targets are. And you pronounced it wrong. Dude, if I pronounced that one wrong, that would actually be embarrassing. And then we'll keep going from there. Again, we'll have the hood event tonight. I don't think we have anything else that crazy happening today or tomorrow. Thursday, we get CPI. So we got the labor report. It is what it is. Wasn't too bad. Wasn't too good. Markets continue to be flat to red. So we'll just see at the end of the week where it goes from there. Amit seems a lot less stressed after hiring a manager. Honestly, I am a lot less stressed Just like so many things already have been taken off my plate. Again, the New York City February meetup, I'll put that link right there in the chat if you want more details. If you have any questions on it, email jess@akcoms.com. A bunch of you guys have already reached out. So yeah, we'll keep this going from there. All right. Thank you, everybody. Appreciate it. I'll see you guys for TT on the market close. And we will keep going from there. The VC stuff, I just signed the legal docs, so you're going to get some details on that soon. I just signed those last Friday. So there'll be a website for that, an email to contact, all that stuff, and that stuff should be updated soon. All right. Thank you, everybody. We'll see you guys on the market close. Bye, everyone. Have a good one.